fields, the objective is common, to have a very strong, reliable digital society for the future. And that's where we are all about, that's where we all come from. So thank you so much for your time. I am sure I look forward to a very interesting and engaging and intellectually stimulating session as we move on. Let's keep this discussion very spirited and let's enjoy the session. And if I can set the context of the session, digital payments has seen a momentous growth in India in the last few years. Look at POS machines, look at the number of transactions on POS, online, offline, number of cards, credit cards, debit cards, the value of these transactions. There has been a tremendous amount and phenomenal amount of growth in India in the past few years. If you ask me, the biggest buzzword in the digital industry, which has been there for a long time, was and is still digital payments. So digital payments still stays as the biggest buzzword as we move on, in this particular space. But proportionately, obviously and for obvious reasons, if digital payments has seen a rapid growth, we also ought to see a rapid growth in the digital acceptance payment infrastructure. And that's what we are all going to speak about. We have seen in the
emanating out of the unmet customer needs. Second category of drivers are supply-led drivers, where service providers and market players are pushing the envelope on digital innovation, and they are sort of creating their own demand. And then you have secular drivers around the regulatory push to bring in better transparency, speed, customer protection, security, as well as creating a financial services infrastructure, which is being set up and pushing the innovation agenda. Digitalization, of course, is fundamentally going to change the way transactions are carried out, both on the payment side, on the retail side, as well as obviously on the corporate side. And at the cutting edge of this is going to be the user experience. So the customer expects financial services, particularly payments, to be invisible, seamless, real-time. But also we are going to see new value-added services coming in this space, such as hyper-personalization, real-time cash management, new purchasing insights that customers and merchants would actually value alike. New players are providing value-added services in addition to traditional financial services. This actually opens up new revenue streams and hence probably a flexibility to look at a share of wallet from a customer's perspective, or maybe cross-subsidizing or pollinating some of the other services and increasing the revenue streams. According to World Bank, actually, globally there are about 1.7 billion unbanked individuals even today. And this translates that, fintechs and challenger banks will be central to integrate these people into global banking systems. The India story, of course, is also, in the same stage, despite the fact that, we today might have very low proportion of unbanked accounts, the operationalization, the penetration of financial services is extremely low. So these challenger banks or neobanks or fintechs in strategic partnerships with financial institutions, retailers, government sectors will help democratize financial services by providing basic financial services in sort of a fair, transparent way. On the other hand, you have the regulatory and supervisory authorities who are faced with additional challenges. That how do you draw a regulatory framework which achieves the right balance of promoting these value propositions, at the same time protecting the system from risks which are inherent to digitalization of financial services. Now, as the market transforms, we will witness a swing towards customer-centric factors such as simplified access, embedded financial services, and obviously higher focus on financial inclusion. But in order to match this rapid transformation, regulations will need to be overhauled in order to keep in line with the changing face of financial services. India has been sort of, from a regulator's perspective, always slightly ahead of the curve and in some sense shaping and influencing the way the entire industry is transforming. And that is also going to be the heart of today's discussion. I think that open banking is going to come up with its own set of challenges. The customer actually owns the data, but this data is vested right now with financial services institutions. How do you open it with accredited third parties to create value propositions which are unique from a customer's perspective? I think that in summary, as the profitability and the profit pools come under pressure from traditional banking activities, we will see financial services turn to data monetization for revenue. So data streams will become much more valuable when they are granular, right? So if there are product level data, dimensional, which includes say location level data, and basically creating a data cooperation and ecosystem partnership, which will be critical to realize any gains, particularly from a customer's perspective. So with this, I'm looking forward to a very, very rich interactions with the panelists. And may I invite now Rishi Gupta to come and speak and give his opening remarks on the topic regulations versus revenues and how do you make them work in tandem. Over to you, Rishi.
Thank you, Manish. I think the topic is a very interesting one in terms of regulation and revenue. One always feel that if it's regulated business, there is hardly any revenue and you can't make money out of that business. I think uh, no better than us who can really go into deep into this particular topic, because as payments bank, when we were conceptualized and when we started to roll, the general feeling in the market and was that it's a very regulated, restricted kind of a payments business. You are not allowed to lend. You can only take deposits up to a particular amount, and there is so much of digitization already happening in the country. So, what is the niche a payments bank would bring in? And the regulation is actually curtail the dream of having a larger financial inclusion impact because of the restriction which it brought in. I'm happy to say that in 3 years post this, looking at the challenges on the regulation side, we started to focus ourselves more on the rural side, something which Manish also touched in terms of financial inclusion, the topic of the unbanked, underbanked segment. I think when you look at payments ecosystem and you look at regulation, obviously there are regulations which states that you can't charge, like a zero MDR is a recent regulation on the merchant acquiring. But having said that, in our payments bank business, when we look at regulation, we started to see what is allowed rather than what is not allowed. So the first premise where we started to focus ourselves was that what is allowed within the license, let's look at that. And once we complete that, then we'll see what next we have to do. Within 3 years, we became profitable, and by focusing ourselves on the rural segment, by focusing ourselves on the underbanked segment, by focusing on the physical and the phygital needs of the customer. So the customer is very smart. Right now, the customer used to travel maybe to branches and ATM. We have seen a consumer's change in the behavior of a customer, moving away from branch to non-branch models, to from ATMs to non-ATMs, and coming to local network of merchants. We saw during COVID it further accentuated it. So just to share in terms of our growth, in terms of transactions, we have grown by more than 60% in the last 1 year. Our merchant ecosystem has grown by more than 2 times. And on top of it, we on a monthly basis, we are profitable. So from a regulation point of view, I would say that if the regulation is restrictive and you are bound by this regulation, you'll have to find ways within the regulation where you can actually make it work. Having said that, credit has always been a challenge in payments bank, and we have tied up with some other NBFCs who can provide credit on our platform. But now the regulation is opening up. They have allowed payments bank to also start offering credit through a small finance bank license. So I would say the regulator in India, and Manish in his opening remark has said that also, that our regulator is way ahead of time and has been focusing on how do we make this model sustainable over a longer period of time. So in that period, looking at the consumer change, and I would say that if the consumer is ready to value your service and they see value in your service, I think you can charge the customer. Some companies, some fintechs choose not to charge. We know BillDesk has been one of the most profitable fintech companies in this ecosystem, and they have followed a model in which they charge the players in the ecosystem. So if the regulation is allowing it, and regulation has always been very open as far as pricing is concerned, it is upon the incumbents who want to charge or not charge. So I would leave it at that, that the regulation is open. They never dictate in terms of the pricing. If you feel you give a lot of value to the customers, and they want to pay you for that service, you make a revenue model out of it. BillDesk and Fino are two very good examples on this panel who are profitable companies. Over to you, Manish.
Thanks a lot, Rishi. I think very interesting opening remarks. I'll move on to you, Vasu, for your opening remarks, please.
Yes, thank you, Manish. Just the topic, I think I want to reflect on the irony of the heading of the topic itself. Regulator versus revenue. In any other context, if one were discussing this anywhere else in the world, or even if it talked of it as India, any other industry vertical, normally the discussion topic would be regulation impacting growth, impacting innovation, compressing margins. the peculiarity of the situation we all find ourselves in the payment industry is regulation versus revenue. It goes to the moot point of the business itself of being revenue, of impacting the revenues. I think Rishi has outlined, some of the key aspects of how does a company deal with in a situation like this in his opening remark. I will focus in my opening remarks on a couple of aspects. As to every industry has regulation, and it is a sign of the maturity of industry, or the growing up of an industry when regulators wish to regulate. If the industry is not relevant or very small, invariably there is regulators don't take interest. So I think that's a big plus point when we say payments industry is getting regulated. It obviously has now a life and stature of its own. So that's the first part of it. And like with any regulation, there are going to be pluses and minuses in various formats, and people work within that. But within the payments industry, I think currently regulations of a nature such that it's like entering a boxing ring. The marketplace or the rest of the industry is the opponent, and you having to fight with one hand tied behind your back. It's a question of looking at, is there a fair way for the industry to grow or for the customers to be served? That to me is at the heart of the topic. Taking further on the analogy, yeah, sure, you can find a way to survive, win the round, or keep running around in circles to avoid getting crushed and finding a way to survive. All these are models people adopt depending on where they stand, right? But it doesn't take away from the fact that we're all fighting with one hand tied to the back. While we'll discuss, I guess, over the course of the panel, some of these aspects of it, I just wish to highlight 2 or 3 things. I think the most visible aspect of regulation of the payments industry in the marketplace has been that of the MDR. Zero MDR has been widely publicized. A lot of people understand context, and that's seen as the one key regulatory impact. What I want to highlight is it's just one of the key regulatory impacts for this business. There are many aspects of regulation, but I'm just looking at the points that impact. One has been zero MDR, but I think an equally other important aspect which is never discussed or rarely discussed is the licensing policy. If we look at what's happened in the payment industry and the various verticals that have got licensed, in recent years, where you take a PPI industry or a bill payment industry or the about to get licensed payment aggregator or the payment gateway business, look, what has licensing done to the industry is an important aspect to consider. For example, in the bill payment, which is known as BBPS, you have more licensed payment players than the banking industry has in terms of Indian private and public sector commercial banks. BBP has more bill payment license holders than banking industry players. More players than insurance industry has IIDA license players. Players than what mutual fund, SEBI has licensed mutual fund. The fact that you have a licensing policy that broad bases it to such a large extent is another aspect which impacts how an industry can grow. The third aspect, of course, is the what I call the in a regulatory sense, the monopolistic mandate equivalent. In recent times, in a that's a non-payment sense, the topic of a 30% charge by a Play Store attracted a lot of attention and a lot of attention drawn to it. But within the payments industry, for example, within bill payments, we have a regulatory mandate to route transactions only a certain way, and where the charge, the equal of the Google 30% there is almost a 40 to 60% charge that you're obliged to pay here of the revenue. So there are 3 aspects. I said zero MDR has been visible, but the licensing policies and the monopolistic mandate of routing transactions a certain way all have a significant impact on the revenue aspects. Over the course of the panel, of course, we can talk of what players should do to survive in such an environment. How can they kind of rework their business models? But with that, I'll pass it back to you, Manish.
Thanks a lot, Vasu. Manish, can we have opening remarks from you?
Sure. Thanks, Monish. I'm happy to be here and share my perspective. I'm just a couple of initial thoughts, and I'm going back to Vasu's statement on the title of the conversation. It uniquely mentions the regulation versus revenues. I think there's the revenue piece, there's the growth piece, and the profitability piece. I think that, and leaving aside profitability and growth, revenues, as we know, given the payment ecosystem and the different types of players that are, I mean, you could have from a processor to a end-to-end destination that is completely branded as a payments destination. I think the revenue models for each player end up being different. In some cases, it could be just a pure transactional revenue as some would look at. Then there are some other revenue streams, whether they are linked to the customer life cycle or credit decisioning. Some of these aspects we'll speak about later. But I think, and thus with the fundamental question saying that is regulation actually impacting any of these different revenue lines? I think the answer changes as Vasu mentioned, and there is a nuance to how it could impact each of these revenue lines. There is one could say that a MDR regulation impacts a direct transactional revenue, but there could be other regulation which could limit how you look at the customer base and try and upsell these customers to sort of higher value or higher order products, which could actually deliver more revenue over time. So I think it's a bit of a nuanced thing. I don't think that regulation is actually inherently against any specific business model or profitability end point, so as to speak. But I think it's a slightly nuanced thing. But the more important also, and I know Vasu touched upon it, is often if you look at the last 17-18 years in payments and financial services, there's often been a sort of an innovation cycle and followed by a regulatory cycle. And largely, if you go through these, it's tried to address two specific aspects. One is the customer protection piece, just to make sure that complicated products or fly-by-night operators don't sort of fleece customers and get away with it. So it's the customer protection and the redressal of grievances, etc. And then the second thing is around systemic risk. I think we've been very fortunate enough to have a regulator who's been participative, who's been very thoughtful and also has been able to look around the corners and has taken very measured steps in both these directions. So to your question, should we live without regulations? I think regulations are good. We are very early in customer adoption curves, depending on which cohort you look at, and there is a long way to go, and it's very important to develop trust in digital payments. So it's required, but how it could potentially impact the long-term profitability and the revenue pools for different players in the ecosystem is a bit of a nuanced argument that could differ depending on the player of the ecosystem you talk to. Back to you, Manish.
Thanks a lot, Manish, and thanks a lot to all of you for your opening remarks. Let me start with the questions, and for the audience, there is a chatbot which is available where you can post your questions. There are a few questions already here, and I will direct those questions to our panelists in a moment. But first question is for Rishi, is that given the economic situation at this point in time, what's your sense on the overall economic recovery, and what should payment companies, generally financial services companies, do at this point in time?
So if I look at the economic recovery, I would say it's been a very sharp recovery in the last quarter, and we see the data also coming out from a 23.6 to 7.5% dip in GDP. So very smart recovery which is there. As we know, we are focusing more on the rural and the lower income category of customers predominantly, and we have not seen any big impact of lockdown coming on that segment. Rural has been doing pretty well. The agri sector, if you see the GDP growth in agri is about 3.5 or 3.6 compared to a drop in the GDP growth in the first 6 months. So from that point of view, I think there has been a good recovery for companies who are focusing on the agri and agri supply chain kind of a business, and especially who are focusing on the rural segment of the business. We saw our remittance business go down because of the movement of people from urban to rural during the first phase of the lockdown. We have seen a recovery. We have come back to 80-90% of that level. Overall basis, we have seen a 50% jump in our transaction volumes from April to October in this year. And on the generally, in terms of what the payment companies need to focus on, I think they don't need to change any of their plans as such. We are seeing some of them getting into some other businesses related to lending and other options which are there, but that's more from the business model point of view, not because of the point of view of the economic drop and then recovery. So I would say we should just stay on course on what we were doing earlier. And we see that the overall basis, we were one of the beneficiaries. In fact, we coined COVID as creating opportunities in virus infected days. So it was a good period from a business point of view, those first few months as such. I would say that we should just stay on course. We don't need to change too much. The economy is coming back and will definitely help all the payment companies come back to the pre-COVID levels and even better. Because one big thing which companies have done very smartly is that they have been able to rationalize their costs to a large extent, and the economic value or the unit cost has come down drastically. So if we see the revenues coming back to the same level with a lower unit cost, I'm sure we will see a different business model emerge in the next coming years to come.
Thanks a lot, Rishi. Vasu, what's your sense on this?
There's some parts that I agree with Rishi, and some maybe have a different point of view. But broadly, I think on terms of recovery, there is the broad macro data that's been published. Depending on the accuracy of it, the signals are for everybody to read, meaning there is a sharp recovery in that sense. But both anecdotally and let's say from just what we see some on the platform, I do think what this FY20 will end up doing, right? The 3-6 months can be an aberrative in terms of there's a lockdown to various things. But I think what it does is it's brought sharply into focus for businesses that having an alternative channel, which is essentially digital, is a must. Right? The vulnerability of only physical has got kind of exposed. Therefore, businesses that have the ability to kind of open up the channel will all focus on it. So in that sense, it will be a big flip for the digital side of things. They may all follow different curves and different pace at which it will happen, but I think it's highlighted that. And at first pass, we'll see all the large organizations, whether it's FMCG or anybody else, accelerating their digital plans of how to create a channel for situations like these. Secondly, from a regulatory or government perspective, I think you always look for kind of silver linings to anything. And even though we're going through, so to speak, a downturn in terms of the world over, all governments will find what do you look for and how do you kind of benefit from this to do something good for a country or economy as a whole. And I would think India will focus on the digital story to say that bring in more policies, more regulation, which helps the digital push. So I think that's the other thing that will happen. But what I think it does is twofold. One, just given the India structure and the kind of distribution of various things, of wealth to equality, everything else, my intuitive sense is this will, over a period of time, in the next 12, 18 months, we'll see a higher consolidation of share with the larger players than the smaller. So
very fast. So even if you do not want to only venture into payments, you are forced to be a semi-bank, even if you don't want to do banking, because acquiring a standalone business, obviously, with the cost what I just told, is not, maybe you will be able to sustain unless you not scale. But even you are going to pay and cost for even the volumes where you don't make money. So your platform is actually processing the volumes of a payment option which doesn't get you money. In fact, it will add cost every time the volume is going to scale up. So profit is somewhere far. We are talking about for sustainability. Okay. So that is one point. Second is, when you just ask me, is it profitable? At PaySwift, we could, we launched the PaySwift app, the PaySwift Set app, which gets you instant onboarding for POS. And we were the first in the country because we thought that onboarding a merchant itself is a big cost. So remotely, even in COVID times, we could acquire some 15,000 merchants a month because it was remotely acquired because of the app, because of the onboarding. We made it so that in 15 minutes, somebody can onboard with a POS machine. So we could cut down that cost. Now, when you come back in terms of that, okay, whether it is a profitable, I think we as an industry, we all know that, is it a standalone? And the answer is no, because of the cost, what I just told you, like 8 to 9. And I'm not sure whether everyone knows, because the merchant thinks, yeah, madam, तो terminal ही डालना है, आपको इतना कॉस्ट क्यों है, आपको रिकरिंग क्यों चाहिए, आपको पर ट्रांजेक्शन क्यों चाहिए. मैंने बोला भाई मुझे कुछ भी नहीं बोले, मुझे पर मत दे दो यार, हो जाएगा. But how many of actually the industry people even who as a cost service understand this? And as I rightly said, that you are forced to be a semi-bank, and then you say that everybody wants to be a bank. But hey, when you've invested so much of money inside a business and you're not making money, you're forced to do a para banking. Then you need to do lending, you need to do value-added services, you need to do inventory management, you need to do everything for a merchant. Because payment as a standalone business itself is a non-sustainable business, which I'm sure everyone will agree. So if you ask me that what is the jargon ki chadi for you making profit? Yeah, for us it took almost 7 years for us to be profitable, and we are profitable today. But it came out, it came with lot of ups and downs, and obviously with the changes when it comes to zero MDR, so many things. We had to bundle VAS, we had to bundle lending, we had to bundle inventory management. And we were forced to be a SaaS company from a PaaS company, which is a payment as a service. And I'm sure that is applicable for everyone who is there in the panel. You started with payments, but every time the ecosystem changes, you need to come layer. Then you need to have your own switch, you need to have infrastructure, certification. Even if you don't want to do that, you have to do it. So, and that's how you go on a profitable journey. And over the years, you realize that, oh, if I knew that these were the things when I started the business, I would not have started. But hey, I'm lucky I did not know that all these were things going ahead. So I'm sure that when you want to go into a profitable business model, payment standalone, obviously we all know, because we have been years, might not be a good idea. You need to get into the para banking, into lending, tie up with NBFC, and you need to do everything to service and to see that the merchant is not going out of the system. Because getting the merchant is easier, but treating the merchant has become so difficult, because even if 2 bips somebody is giving a discount, the merchant goes away. And all your acquisition cost, what you get for the merchant to come to the system, it goes away. So the entire thing is that today, just because we as an ecosystem or we fintech players in this industry are offering a lot of value-added services along with payments, we become profitable, or we see a path of profitability. Otherwise, I'm sure we all know about what has been the history in terms of payments. Thanks. That was a good question, Rajesh. Thanks.
Yes, but X cost, Y cost, Z cost. And the biggest cost is managing all this cost, So obviously there's a lot of cost there. So question to you, Ramesh, we have heard of FASTag and we have heard of new innovations coming right now. What could be the additional possible use cases to promote digital acceptance? New additional cases.
So I would reckon the sky is the limit in terms of use cases, Rajesh. I mean, if you look at every step the country has progressed towards, by setting up infrastructure, and this has to do with the growth of India as a whole. I mean, you look at toll highways. I mean, we came up with highways and we came with toll. Now you have the FASTag, which means you need a payment infrastructure to take care of it, right? Then you have metro systems, the bus services, all that getting interlinked in at least the large cities, and metros are going to smaller cities as well. Again, you're talking about digital acceptance infrastructure and digital payments being possible. Now you also have as a result of COVID and also companies, many companies have decided to digitalize themselves. That leads to a lot of requirement of digital payments. You have logistics platforms, modern retail, marketplaces. And then, of course, as a country, we have evolved knowledge-intensive services, right, which we can offer to the entire world. Healthcare services, medical, and global IT services. Then the other area that I would look at where use cases will come in the future is start offering to the farmers at large. And all these use cases essentially end up justifying or requiring payments infrastructure or some form of digital payment or the other. And I'll I read a McKinsey article and it played on my mind. The growth that McKinsey expects in some of these areas like financial services, they think that the growth in digital, the digitalization and the payments would be something like 170 times. Logistics 30 times, retail 10 times, healthcare, jobs and skills. All these are in 10x, 20x, 30x. And if you take the most interesting one, which we live with in the paradox of our times, e-commerce has taken off, in the country. And recently the Diwali sales ended. Huge, upside in terms of number of transactions across the country, servicing many pin codes, tier 4, tier 5 towns. But guess what? 70% of these transactions are cash on delivery, right? And that's the biggest challenge that e-commerce companies are facing today. How do you remove this cash from 70% of the COD that they came up as an innovation for India? There is a huge opportunity for companies like us who are on this panel and in listening in, as part of this conference, to see what we can do to reduce this 70%, make it digital even at the point of delivery. There are innovations. We've seen some companies come out with innovations, some companies, come, whether it be an online product like Link Pay, where you send an SMS and the customer pays, or the courier carries a simple QR code which you scan and pay. Many innovations happening there, but this itself gives you the potential use cases. And as we, as a nation, as we move forward in our development cycle, I think use cases will be plenty for all of us, Rajesh. And I maintain that from the beginning. There's enough and more for a lot of payment innovations as well as payment companies in this country. It's just that we have to pick and choose the areas that we want to service. And as Preeti aptly put it, it has to be profitable. It can't be, we can't be funding this exercise. This is something that the economic value from digitizing payments is an order of magnitude that will impact our GDP tremendously. And that's why when you have reports that compare us to Singapore in terms of per capita digital transactions, 782 versus us is 22. That's the distance we need to cover. And you will see the impact of that in the all-round progress of the country.
True, Ramesh. Sky is the limit. Would ask about that. Let us shift the topic a bit towards the developments on the regulatory side. Let me put this to Kumar. Kumar, can you share your insights on the RBI instructions for interoperability QR against the exclusive or the proprietary QR codes in order to reinforce acceptance infrastructure?
Yeah, sure. So I think as an organization, we believe we are still at a very infant stage in terms of the digital payment penetration, as most of the panelists have agreed, and the size of the pie has to grow. And that's what we believe. And if that grows, I think there's enough business for everyone. And ultimately, consumer and merchant both should have a choice. So from our perspective, so we adopted interoperable QR codes. All-in-one QR code is what we call. You can scan with any UPI app and you can pay. I don't see it as a challenge at all because I think most of the industry is already on it. And that's actually the way forward. So we are like fully compliant and fully in agreement with the regulator's decision on this. Yeah.
Okay. Ramesh, so Jayjit, your quick take on Section 269 SU?
Very interesting. There cannot be a quick take on it, but I think it's in a manner it's a forward-looking provision which allows or forces companies which have got turnovers of over 50 crore to mandatorily provide payment mechanism of UPI-based payment and QR code-based payment and RuPay debit card-based payment to all its vendors and creditors. Having said that, it's also a built-in discriminatory mechanism that why aren't the other systems being supported? And why is regulations only pushing for a certain kinds of payment system? And clearly, these are not just government systems. UPI is not just a government system, and there are other competitors who will be coming up to UPI. So why only UPI being pushed? Although, as I said, I know it is a forward-looking, but it should not be discriminatory in nature. if I extend that argument, why is it that there is a GST on payments made by credit card? So there is a penalization on other forms of payments while there is a promotion of a certain kind of payment. And that is what I was mentioning as creating a non-level playing field among the various payment mechanisms. Let the best payment mechanism, evolve, and different segments and different requirements will have different payment mechanisms coming in without the distortion of regulations being brought in. In fact, where we actually need regulations are aspects such as safe harbor. One of the topics that was coming up that, in fact, I guess Ramesh was mentioning was, why should we be penalized for deficiency in the market? For example, if somebody has made, a payment using credit card, somehow the credit card network is responsible if the goods were delivered or not. We are not an insurance company. Why is that still a liability for the card provider? It's almost like saying if you buy something by cash and you're not happy with it, RBI will refund you the cash. That doesn't happen. If RBI is not refunding the cash, why are the card companies being made to pay back the money, which was done as in terms of fraud? If an adult has done a transaction, they would have knowingly done it. If they had done the transaction using cash, then there would have been no recourse back to the credit card company. So there needs to be a safe harbor for many of these fintech companies, these digital payment companies. And I think that's where regulation should be coming in rather than creating regulations which distort the level playing field.
Yeah, thanks, Jay. So as we come towards the end of our time together, I would like to have one common question, which probably can be responded by Preeti as well as by Ramesh. So is the current uncertain situation a boon in disguise or a hurdle in the way of promoting digital payments? Is there any impact on the payment infrastructure? And will people turn to traditional payment modes post the COVID? Preeti.
Yeah. Obviously, I am in the industry and driving a business, I would say it's a boon, obviously. So it is definitely a boon as long as it is not only sustainable, but we as the stakeholders and very important stakeholders of the country are also incentivized because there are additional costs what we bear. We cannot earn from float, fintech company, and so there is an incentivization. Obviously, this boon can become double boon. That is the first point. And second point is a lot of highest amount of regulation and also innovation in terms of technology. I'm sure it is payments. And if you see tomorrow, we're talking about tap to phone, we're talking about a lot of other innovation which comes. So I definitely think that this is definitely it's going to be a big boon for India in terms of we having a digital leap. But there are a lot of things which we need to fix once we go to that, big volumes and big scale. And I'm sure that, the government definitely will look at it.
Right, Preeti. Ramesh?
Yeah, thanks, Rajesh. I think let's be clear that COVID is a big disruptor, right? Its cost is enormous in terms of the damage it's done to the economy, to the livelihoods of people, and to the lives of people. Many people have lost their loved ones, but at the end of the day, every such event, a crisis throws up a set of opportunities and set of things that we can do as a nation. And for us in digital payments, I think it certainly is an opportunity that has come up because people have been forced to stay indoors. So everyone has started using, as I said before, digital payments and trying to get more users online who would probably have resisted the urge to do that in the past, right? Now you have delivery services, entertainment is consumed in at home, education, and you have to give it to the teachers in our schools. I mean, I see my children's teachers who made a fantastic transformation. I mean, they've not used technology, but now suddenly they're using technology to teach the kids, right? And they're doing a great job of it. So whether it be ordering for food, education, delivery services, health, fitness, everything now, the home is the center place of everything. And so it obviously has given a huge boost to digital payments. And as I said, going forward, if once we get a handle on, we've got a significant handle on at least minimizing the disruption due to COVID. Once we have the vaccine, have people moving forward. I think when as a nation we start taking the right steps, which is, once you get digital, Rajesh, there's no going back, right? I mean, how would people sell cars? But the good part is, the car companies, automotive manufacturers are now able to sell cars, launch. There have been so many new launches, right? Similarly, it goes for other products. I'm not just taking an expensive product where you never considered going digital to buy. Now you're willing to go digital and buy. And so at the end of the day, I think companies will evolve. I think as a country, we are good at creative solutions, and that's what I think we excel at, especially when there's a crisis. We need to come out of it. I think people come up with more solutions. And I think as the country becomes more and more digitalized, there'll be many more opportunities for us. And as I said at the beginning of my discussion, that you need to onboard another 500-600 million Indian citizens into the digital bandwagon. And that will be enormous business for all of us, as well as contribute economic value back to the country.
Right. So once you start going, there's no going back. Thank you, Ramesh. Thank you for those valuable reviews. So I think in the essence of time, I can see the host on the screen now, which means to wind up. So I would like to thank all the panelists, all the speakers for sharing your valuable thoughts, your insights and views on this important discussion. I thank you once again as I look forward to correctly come forward and build a very positive digital India. Thank you so much.
Thank you.
Thank you. Thank you to the esteemed speakers for this enlightening conversation. It was an absolute pleasure to listen to you. Special thanks to our sponsors, title partner Lyra, powered by partner PhonePe, agenda partner PayPoint, payment partner PayU. Thank you to our attendees. Please stay tuned. Thank you.
Thank you so much. Stay safe. Bye.
Yeah. Bye-bye.
Bye.
One of the Digital Money 2020 organized by Payments Council of India. I would quickly like to take the opportunity to thank all our partners, our title partner Lyra, our powered by partner PhonePe, our agenda partner PayPoint, our payments partner PayU, our gold partners Visa, Freshworks, AWS, our silver partners Zeta and Paytm, our knowledge partner PwC, and our design partner eCommerce. Wow. So without further ado, we would like to commence with our next session. Our next session is a panel discussion on the topic regulating the payment gateways and aggregators, a move to freeing the industry or restricting its growth. And for the same, I would like to welcome first our moderator, Mr. Amit Jain, Director, Tax and Regulatory Practice, PwC India. We welcome you, Mr. Jain.
Thank you. Hi.
And our esteemed panelists, Mr. Devang Nirala, CEO, Atom Technologies, Mr. Akash Gyani, co-founder and COO, Instamojo, Mr. Tushar Shankar, founder, e-commerce, and Mr. Ravi Gupta, founder, SafeXPay. We welcome all our panelists. And I would now request Mr. Amit, thank you. Mr. Amit to please take over the session. Thank you.
Thank you, Garima. Good afternoon, everyone. Hope everyone is keeping safe and healthy.
Yeah.
Welcoming again to all the audience and my panelist member to this interesting session on payment aggregator and gateway guidelines. As a quick context, way back in 2009, RBI issued a circular indirectly supervising these set of players through the nodal account framework. Since then, for the first time, RBI issued the comprehensive set of guidelines asking these set of players more into payment aggregation business to come and apply for the license, and for payment gateway companies which do not handle customer funds to adopt a baseline technology standards recommended by RBI. So we have these set of guidelines from merchant onboarding to settlements to handling of customer grievances, including data security requirements. Unlike in some other countries, such as Singapore, Malaysia, and EU nations, where the central banks and financial sector regulators have adopted a risk-based approach in regulating or supervising some of these payment products and entities. In India, the Reserve Bank of India has preferred a full-fledged approach to regulate payment aggregator companies in the interest and to protect customer funds and data. So that's where we stand today, where we are before the guidelines, and we have a universe of players in payment aggregation business. who are looking to see how the impact of these guidelines will come in as and when they start implementing that. So with this backdrop in mind, let me now turn to my panelists and let me start with Akash. Akash, I just thought maybe as a good starting point, it would be good if you share some perspective about this industry as a whole, the evolution of this industry and how you guys have come and helped the merchants come on board adopting digital means and digital payments as a channel. So Akash.
Right. Thanks, Amit. So yeah, it's been very fascinating, right? I remember I had first made an online payment back in 2002 or something. I'd bought a ticket on IRCTC, and I was just amazed. I'm like, oh, this works. I don't have to go and queue up at the station, and this ticket just only an e-ticket. It was basically we had to just make a transaction, and a couple of days later, the post came to my home, and I was so thrilled, right? And I'm like, okay, this is the future of sorts, right? This is the way commerce could happen. And I think since then we've come a long way. I remember we started, right? We started Instamojo back in 2012, so it's been more than 8 years now, and the driving point for us was, can we help every small business come online and adopt the internet for their business, right? Because till then, there were payment companies out there, but they were essentially catering to the bigger companies, to the big enterprises, right? Like IRCTCs and many others. But there was no room for any small business to come and use them. And that's why we thought, can we do this? Can we make a simple platform for these companies? And of course, there's a lot of challenges we faced, right from trying to sell this idea to the banks to understand what kind of risk is there, how do the regulations work. And yes, that has been simplified to a good extent since then. But I remember in the early days, till from 2012 to 2013, 14, like the first 2 to 3 years, every time I spoke to a merchant, the common thread through those conversations was they were very happy with cash. They're like, yeah, my customer pays me in cash, and this is good. Like I don't have any challenge with it. And it was difficult to sell the idea that your customers can be anywhere. They can make a payment to you online, and you save a lot of your time, effort, maybe some cost also with this, and it's just so much more convenient. And they never could understand that at that point. But yes, things did change, thanks in a large part to all the great e-commerce companies that we have, thanks to the wallets getting popular after that, and of course then UPI came in. So I think multiple things have happened in the last 6 to 8 years, and of course even before that, a lot of things that happened. So to give you a sense, in this year, in our short journey itself, we have onboarded about 1.4 million merchants on Instamojo to collect online payments. And this is just us as one of the participants in the broader segment. There is so much more which has happened. There are so many millions of merchants which have come on board collecting payments in various ways. It could be cards, it could be UPI which in itself has been nothing short of spectacular, right? In just about 4 odd years since it's launched, today about 30% of all our transactions are powered by UPI, right? Or basically the UPI is the mode of payment. So that has been fascinating. So the way some of these things have grown, and I think just maybe to complete my point, some of the things that we have seen in the kind of merchants that we've seen coming online. So through this journey, right, what we've seen is a lot of new use cases which we never thought were possible. We've seen individual tutors coming online and selling content where their students can download, essentially pay them for IAS coaching and many other kinds of exam material, and prepare for those exams. Or we've seen so many cottage industries across the country, like houseboats in Kerala, so many other cases. In many of these cases, these are businesses which we never thought were possible, right? Or which actually existed out there. So it's been fascinating. And today we're seeing this whole new set of businesses. A lot of these entrepreneurs, or we call them solopreneurs of sort, sitting out of their home and running a business, right? Your neighbor who's making chocolates or some other things at home and trying to sell that in a small community across a neighborhood. So a lot of these businesses are coming online, and what all of them essentially are relying on is the power of the internet. And of course, when you do that, online payments or basically payments powering that is essentially the key infrastructure which all of them need. So I think they're in for much more exciting times. And yeah, it's been a fascinating journey.
Sure. Thanks, Akash, for sharing this perspective. Coming back to the guidelines, let me come to Devang. What's your initial quick reaction on positives that you see from these newer guidelines, and maybe one or two constraints that you foresee on implementation of the conditions as you move forward?
Yeah, thanks, Amit. Excuse my voice. I have been having a sore throat since the last 3 or 4 days. It's non-COVID. Don't worry about that. It's perfectly fine. That will be giving a disclaimer. If you look at the guidelines per se itself are very positive in nature, because when you talk about RBI coming and issuing a guideline and regulating the payment industry, see earlier, normally when a person looks at it, any industry you look at, basically you talk about regulations are bad, generally we feel. But given that payments is a very, very sensitive area, and today, for example, we talk about there are payment gateway providers who are mushrooming at the pace of at least 4 or 5 payment gateway providers per state. So I will not be basically saying that there could be lesser than that, but definitely there'll be more than that. And that definitely poses a risk to the entire system per se. Number one, basically risk is not only two-factor authentication and other things, but there are a lot of merchants who are getting into international merchants, plus there are people who are getting into, let's say, merchant frauds. There are large amount of merchant frauds that could occur out there. Systemic risk, and it's a good thing that RBI selects. That's what I would say that. Second, if you look at from the guidelines per se, of course, with the guidelines, they put in an entry barrier with the number of capital, because that capital about 15 crores and then subsequently going down and at 5 crores. I think that's an adequate kind of a capital. They put it in line in sync with what was there for PPIs, and that creates a sort of an entry barrier. You would not have people coming into the ecosystem. Also, not people from becoming a payment gateway. So they're saying payment aggregators, so settlement handling funds, they need to necessarily have certain amount of basically capitalization, so that basically the companies don't go fat out there. So that is one positive I would say. Second, basically, some of the key things I would say is basically, of course, the T plus delta kind of a thing. You had that T plus P, R, S, and basically when RBI spoke about, I think that's the first time. If you look at the old 2009 guidelines, they're not mentioned about basically all those things. They're only mentioned that T plus 3, you need to settle the money. Now, banks and nodal banks are going and working on that principle. The business doesn't work on that principle. Today, for example, if you need to take care of retail merchant, you want to ensure that basically money is given to customer. If there's a chargeback, any kind of response, you are controlled against that. So these are basically some things I would say, basically initial views in terms of positives out there. So aside from that, of course, we've spoken about kind of a thing. Basically, the overall guidelines per se, the guidelines is positive. On the constraint side, yes, there are certain amount of constraints. Thankfully, RBI has removed some of the constraints earlier. Basically, they put in the constraint of following the entire KYC AML kind of guidelines, which I think, given the clarifications of where they kind of diluted that kind of positions, because if essentially we are, and people were, that's one of the viewpoints from Payment Council. I've been a part of the Payment Council, Executive Council, as well as I'm a chairman of the Merchant Aggregators Committee. So the whole essence out for us was basically merchants, whoever are there, have legitimate bank accounts where the money needs to be transferred. So issues still pending right now, I would say, that can be resolved to dialogue with target. One of them is basically we've spoken about storing of data. So in terms of how you look at the user experience, we've already given a representation and all. So in such cases, basically what happens is you talk about recurring payments, you're talking about a whole lot of checkout and faster checkout kind of an experience. I think those sort of experience you kind of miss out when you look at the storage of data issues out there. Second is basically enforcing and trying to ensure that the payment aggregator I don't think, see, we are not regulators. We are not policemen out there. And at the same time, when you look at from merchant side, the whole merchant ecosystem has developed because they are not PCI DSS. Yes, we are all on for card data security and customer security, customer protection of data. But at the same time, since the data is going to reside on a payment aggregator's page itself, when you look at online payments specifically, so it's going to reside on a payment aggregator's page, then it becomes easier for example, to rely on the data which is going, because the data is not stored anywhere else. Only thing is what we can do is basically ensure and ask the merchant for compliance if they're following the compliance or not. But asking the merchant, every merchant in the country to be PCI DSS compliant is going to kill the entire industry per se. Because in that sense, what happens is you have, as I think Akash was mentioning, 1.65 million. There are going to be at least about 5 to 10 million merchants which are going to be online. We're not talking about offline merchants, but at least 5 to 10 million merchants are online. Most of the merchants, 99.5% of the merchants are going to be killed. You're going to take them off the basically electronic payment lifecycle, and that is where the constraints are going to come in. So this is basically some of the issues which I would talk about. I'm sure I would others would have definitely different viewpoint, but yes, these are things which would basically constrain. We are hopeful that RBI will take cognizance of this and at least give some sort of a leeway there.
Sure. Thanks, Devang. In fact, you made a couple of interesting points, and I'm going to come up and have on this data security piece. But before that, let me turn to Ravi. Ravi, maybe your also quick reaction, positives, and some constraint that you foresee as far as the guidance. And alongside, if you could also throw some light on how do you see some of these small players evolve? Are they going to exit? Are they going to stay in the ecosystem? So maybe your perspective around that is also going to be useful.
Sure. Thanks, Amit. So basically, if you talk about RBI move for this the PA guidelines, I think it's a pretty positive for the overall industry, right? And people wants to accompany those guidelines in terms of whether you talk about data privacy or security or PCDSS guidelines, or you talk about the transaction level security. The most important problem which customer faces their transaction status, right? What happened to that particular transaction status, whether it's been handled properly or not. So these are the things which RBI is trying to regulate, which is a pretty positive move across the industry, right? Coming on to the small players, right, which is, of course, there is a guidelines of net worth, which is, I think, is going to kill most of the small payments player. Because earlier, if we talk about the payment, is all about in 2009, right? It was more like a nodal guidelines where you have to set up a nodal, and of course, the money is in control with the nodal bank. As a PA, we are not authorized to access that amount, right? We can just instruct the nodal banks and they can settle it to the respective merchants. But coming on to this the new guidelines, which is going to kill more in terms of the smaller payment gateways. There, just like Devang sir said, right? There are 4 to 5 companies coming on every month or yearly basis into different states, right? So I think these kinds of companies will not come much into the picture, because if you have to obey the RBI guidelines of this net worth of 15 crores by 2021, and by 23 you need to have a 25 crores of net worth. So I think most of the players will get killed, right, in terms of these small players. But of course, there is a lots of innovations and which the industry will try to bring into the picture, because there are certain constraints, like if we have certain compliances which needs to be done, then it's come at a cost, right? So every PA has to go through a lots of putting up a team in terms of nodal officer, customer grievances, the technology level setup, the privacy level setup, the infrastructure level setup. So what would be the cost? So as a PA, we have to basically find out the more avenues how you can re-innovate the overall product offerings. Maybe like I can move. Maybe that's all my view, right?
Sure. Thanks, Ravi. Tushar, your thoughts, reaction on the guidance, and more importantly, I wanted you to maybe share some perspective around product innovations, user experiences. How do you see the life post the implementation of these guidelines? Will the life be as usual, or do you see it's going to impact some of the innovations which you have been doing in the past?
Oh, thanks, Amit. See, for anything to be successful, there needs to be a unified model, and that's basically what RBI has tried to do. There were a lot of payment aggregators in the market, which was largely an organized sector. What RBI has done, it has laid the infrastructure for a seamless payment that needs to happen. That's the code of conduct, that anybody who wants to do payments needs to follow this. So yes, you have a clear view that RBI has set by putting in these guidelines. It's going to get two things. One is it is going to accelerate the digital transactions in the country, number one, because it's a unified infrastructure that comes in. Second, and more importantly, it is going to get the fence sitters who are not transacting digitally come on the digital transactions. Why do I say so? Because largely people, we all have faced these problems that my account has been debited, but it has not reached the merchant. So where do I go? Do I go to my bank? Do I go to the merchant? RBI has set a very clear guideline. This is how you will dispute, or this is where you will reach out to the person. So there is a responsible person who will, and then there are guidelines that in how much time the money should go back and all. So that's going to increase the faith of the general population in transacting digitally in the country. As far as innovations, yes, it will be a tough time for companies that do not reach that kind of a net worth requirement and an ongoing net worth requirement. But innovations are not going to stop. There are ways. So, I mean, you can always partner up with certain PAs, or you may provide your technology to banks, where and these are the agencies who will test your product not only from a scale point of view, because they will get you the scale, but they will also test your products from the RBI guideline, the KYC, the AML, the security point of view. And what will come out in the market will largely be a tested and proven product which comes out in the market. So definitely there will be innovations. I see more of the technology providers or the people who are innovating, tying up with PAs, tying up with banks to get that technology to be used outside by the general public.
Got it. Thanks, Tushar. Very interesting. Akash, I just want to bring you in. So this payment aggregation business or acquiring business is already running on a wafer thin margins. There are a lot of regulatory caps. The business is also getting more and more competitive, and it's hitting your margins. Now with that already, we have a newer set of regulations with a lot of obligations, compliances, reportings, and you need to have a good sort of a governance standards and mechanism in the business and the entity, and have a right set of teams putting in place. How do you see the cost of compliance and the business margin, which are already there, getting sort of more and more impacted, balancing between the two?
So it definitely has been, becoming more and more difficult. And I think just before I come to this, right, on the earlier point, which was about the network, right? So I think Devang, Ravi, everyone added their points, and which of course, Baker, there's a lot of merit there. I think the only concern that I have to add there is it does restrict a lot of new companies from coming in. And like had these regulations existed 8 years back, we would never have been able to start a company and forget about bringing the next set of million merchants online. So I think that's something that has to be looked at. So the other thing regarding this is that the cost of compliance has been going up. And of course, right, there is a lot of money laundering which happens. So it is justified. There are certain things which you have to do. But one thing that we have to, or what we understand is everything that a payment aggregator is doing, what any other payment company is doing, it's essentially building on top of what the banks already have. So there is a certain set, let's say what KYC which the bank has done. There is an escrow account which every company again has to comply with, which is also technically owned by the bank, right? So there is a lot of things are anyways very much under control. So adding another set of restrictions on top of this may not really help. I think it might take away it from actually bringing in more protection. It might go a lot further and just stifle a lot of innovation which can actually happen. What we have seen is over the last couple of years or last year or so is that, see, for a new company, for a small company, working with banks is always going to be a challenge because banks work at their own pace. There's a lot of structure and bureaucracy that you have to go through. So it's never easy. But it's just got a little more difficult also over the years. And I've heard this cry for many companies. And one of the reasons is because banks don't see this as a profit center. Banks don't see a lot of money to be made over here. What that means is they are also a little more hesitant in investing into the space or essentially providing the companies any kind of tools that they need. So it is a difficult, or I wouldn't say difficult, it's a very competitive scenario with, and as you said, right, wafer thin margins. With more competition, with certain regulations around pricing as well, it only takes, a hit for the worse. So some of these regulations do go a step further, and instead of regulating the industry, it actually goes a step further and, tries to stifle the innovation of it.
Understand. Thanks, Akash. A very different perspective you brought in terms of overall sort of outlook of these regulations. Devang, I just want to get you in. Since this guidelines through 2009 have been in existence since last decade, and a lot of companies like yours have already been adhering to some of these practices mandated by card schemes, your acquirer banks, and others, of course, with a different sort of a different approach. How do you see the preparedness of all of these companies once we kind of have this newer set of guidance coming in? Do you think you are already there and there's going to be a lot more uniformity coming in, practices coming in to kind of take these sort of payers and the transactions to a different level? How do you see that space? Because a lot of things are already put in practice by the companies.
Yeah, for a lot of things were in practice, because one of the things I tell you, even at PCI level, we are debated about a nodal bank and why do we need to go in for guidelines and other things. But when we look at the overall thing, yes, there is certain merit in terms of when our regulator thinks about certain things for protection of the entire industry per se, and rather than having new ways mushrooming in. When you look at fundamental changes, because what changes right now for everybody is compliance. Because when you are under a regulatory ambit, what differentiates, let's say, for example, we had been a prepaid instrument issuer earlier. We had surrendered a license because of the whatever reasons. But when we were there, we had seen the kind of regulatory oversight on top of basically whatever functions we're doing. So the moment you become a regulated entity versus you're a non-regulated entity, as a non-regulated entity, it's like you're staying in a hostel, right? You're studying in a college, you're staying in a hostel, you're enjoying your life. You don't have anybody, you just have a warden to talk about. Your warden was a nodal bank account, that's it. When you are at home, at that point of time, you have a kind of control barrier out there. There are going to be basically certain amount of checks and balances. There are going to be certain things about compliance which are going to be far more stringent. If earlier, for example, you could get away with certain things, a certain leeway out there, now it becomes kind of very difficult in terms of how you could escape that sort of a thing, because then you are in scrutiny out there. In a way, it's kind of a double-edged sword out there. It could be beneficial, it could be negative also. For good players, I don't think it's going to be bad. It's going to be good for them. Anyway, they've been following the guidelines, they've been doing everything across. Things are going to go as the way they have been. On the other side, basically, when you look at pricing or anything, I don't think those things are changing. Those are larger discussions which the government of India is having, and basically government is dictating the pricing and everything else. I don't think the pricing is being dictated by RBI. It's only the regulatory side of the whole thing. It's only compliance level changes. So compliance in both the sides. One is IT compliance, because if you look at the overall, look at the annexures out there in terms of the IT compliance they're talking about. We're not even talking about the protection of data or customer protection of or data storage in India and all those things, but a whole lot of guidelines over and about that. The system audit report and a whole lot of other things and the reports that you need to give, those sort of things are going to grow. Plus, basically, yes, there are certain things which have got incrementally added over the last few years. If you look at, there have been guidelines which have been issued by RBI for ensuring that people who have for failed transactions, they have got guidelines about a year back where they spoke about 5 days you need to refund the money back to the customer, else you have a penalty. So these things have been in place. So these have just been put as, I think Tushar was perfectly put it, they put into a box, they structured it rather than being loosely coupled kind of a thing. I think we are going to go forward on that. So my sense is changes, of course, in terms of fundamental changes in terms of compliance. But other than that, I don't think it's going to be business as usual per se. I'm not seeing too many drastic changes coming in the way people are going to do business out there.
Understood. Thanks, Devang. Tushar, I just want to touch upon this data security piece, which Devang just alluded to, more around the storage of credit card credentials, storage of payments data, customer data in the databases of payment aggregators and the merchants. RBI would like these payers not to store these data for security and other reasons. How do you see that's going to impact the user experience going forward? Or do you see that there's a merit for RBI to go back and revisit this condition?
See, how I look at it is two ways. One is that there will be a set of compliance that we already were, whether it was PCI DSS, and some of us also did. For example, we at Commerce also went ahead and did a PADSS of our product. So as far as data security was concerned, so any aggregator today handles two kinds of data. One is the transactional data, which is his card number and transaction, and the other is personal data about him. Right now, we have the guidelines by RBI on how to control the transactional data, but we soon will be getting from the government India about guidelines for personal data storage. Now, when it comes to card storage, yes, it was a very efficient tool where it was a quick checkout for people because card number was already stored, and which maybe there is a restriction which is going to come by RBI. But now we must remember that at the same time now, transactions are not only card based. Tokenization is coming in. You have UPI handles which are coming in. So slowly and steadily, cards will be only a way of pointing to an account, but it will have lot many aliases. First of which is the UPI handle. Then you will have the tokenization, which has already started coming in now. So yes, there may be a slight glitch initially till the time the whole tokenization thing sets in place, but with the people used to using VPA handles, tokenization will be an easier challenge. And that would again get it back, and the transaction would again be seamless, because that's what we all every time say, that all the technology is the wires under the table. What you have on top is just a very plain and simple vanilla experience. And that's what all of these things will enable for consumers to transact even more seamlessly than before.
Got it. Got it. Thanks, Tushar. Ravi, these guidelines at times are seen to be prescriptive enough when it comes to, let's say, settlement timelines in terms of shipment of products, delivery confirmations, refunds to be settled within some timelines. In comparison, there was a flexibility available prior to these prescriptive timelines, and that was more governed by the bilateral contracts between the merchants and the aggregators. How do you see that? Is that the step in the right direction to bring more uniformity across the players and the system? Your thoughts on that?
Yeah, so Amit, I just tell you, so just like earlier we had our nodal guidelines, right? So of course it's running right now also. But coming on to the escrow, going to bring more visibility across the ecosystem, right? Because just like nodal guideline generally says T plus 3. What is T? No one knows, right? So it is, some people treat it as a transaction date, or some people treat more as a delivery date, correct? So right now, if you see the current RBI guidance on escrow, right, it brings more transparencies, right? So where RBI has said that the escrow settlement from the respective banks can happen on T0 or T1, depending on the different business model of the merchant, whether it could be a real-time services, it could be a offline delivery base where they're using the link-based payments, right? So depending on the delivery, you can have next day payments. So it's bringing more transparency across the overall ecosystem, and where the merchant also knows the visibility when I'm going to go get the settlement, right? Earlier, it's already the control into the aggregator level, where basically they can define the T depending on the business model. But now it can be controllable with the new guidelines. That's the best part here.
Got it. Got it. Sure. Thanks, Ravi. Devang, just another thought, maybe a perspective I wanted to begin, and this is more around the merchant frauds. There are enough practices being adopted by all of you in your individual pockets, and now sort of all of the companies now getting regulated and coming to a more sort of a formal regulated ecosystem. How do you see the space getting more sort of a washed out in the context of getting a more centralized merchants fraud ecosystem? Like in the morning, even I was hearing Mr. Vasudevan was making some point around creating a centralized fraud ecosystem or the system. I think that's where you guys are going to be much more relevant and important to share some of the practices, some of the incidents, notifications, which is going to help sort of a lot more other players who are going to come and join this ecosystem.
Yeah, I agree. I think what happens in this case is, after the two-factor authentication, as I said, customer fraud is kind of gone off the system right now. Other channels and other things, for example, UPI, other modes, we've seen different kind of things emanating. Those will keep on coming up and those will get addressed over a period of time. The larger thing is basically the merchant fraud. And this is one of a couple of things. One, basically RBI's initiative of creating a centralized storage or centralized database of merchant fraud was definitely welcome. This is some of the things we are trying to do at even again at PCI, where we spoke about basically creating a centralized database where our individual, because today the entire payment industry is represented by PCI. When you look at payment council represents, so the idea was to basically collect the data voluntarily from basically all the merchants. For example, if there's a merchant which Atom has, which has done a fraud on Atom, we would have to necessarily report it to a centralized fraud bureau, or whether in owned by PCI, or same thing could be at RBI also, and same thing I think is reciprocative, could be with basically Ravi or Cefix or maybe Instamojo or Five or anybody else who are basically having fraud merchants. Let them report it so that tomorrow, if there is any kind of merchant fraud occurring, or any kind chance of any fraud occurring, you're minimizing that fraud. So idea is to minimize the fraud. I don't think you can eliminate fraud 100%. There are going to be new ways of coming out there, but that will definitely help. A centralized storage will definitely help. It's like when you look at, I don't know if you understand the Visa and Master, they have a database called Inmass and Match. So this would become that kind of overall centralized storage wherein every player in the country, when they're boarding a merchant, at least they can do their checks and balances before boarding the merchant, whether a merchant is a fraud or not a fraud out there. And then they can take their own decisive call. See, ultimately, it's whether to do it or not do it. It's a democratic country. You need to allow people to do it. If somebody's risk appetite is very, very high, allow them. They can by all means go ahead and board that merchant. But at least people are aware that whether they need to board the merchant or not to board the merchant. So that's where I would stand there.
Understood. Thanks, Devang. Akash, let me ask you a more sort of a tricky point, nothing to do with the payment aggregator regulations. How do you see, in fact, all of you are funded by investors, whether it is strategic or economic investors. Whenever an investor comes to kind of look for additional funding in the company like yours, what do they generally prefer? Should you be regulated entity, or you be the entity where what you are and doing what you are?
Yeah, that's a tricky one, right? And I keep going back to this quote which I heard, somewhere. I'm not really sure where. It's like, if you're doing something which is not regulated, it's really bad for you. But if it's something that is regulated, then it's like way worse for you. So it's like, two sides of a knife essentially. So I think, see, regulation helps in a way that that this is an industry where there is some kind of thought that the government is giving, which is of course good. Good in the sense the government is encouraging. It understands that there is this entire digital momentum, or let's say payments, is a space which is very essential for the country. So I think in that phase it's good, right? When you say the revision is coming in, and some of the things which Devang mentioned, like this common match list and all, it definitely helps. It helps every company, which is a very good thing. But there is always a very fine line between being well regulated and being overly regulated, and that line sometimes is very easy to miss. So as an investor, the moment you start seeing that it's going over the line, which of course then leads to stifling of innovation, it leads to maybe caps which can be put on your growth. Like for example, there is this 30% market share cap which came in on UPI right recently. So when investors see things like those, maybe they'll feel that the upside is limited. Again, the reason why anyone would invest in any space is because of the upside, right? How big can something grow? And if there are factors which are mitigating that, then it's not a good thing. So regulation by itself is not bad. Regulation is very much welcome. It helps you separate the black from the white, or gives some kind of legality to it. But yeah, there is always a fine line that you draw there.
Thanks. Tushar, your take on this? You want to come in and share your perspective?
Yeah, I would agree with Akash what he has said. Yes, regulation has both its positives and negatives. Negatives, yes, because there is stifling of innovation and there is a limited upside. But see, what I also feel is that for any investor, it is what is important is how difficult it is for somebody else to get in. So if there is an entry barrier which is getting created, the value automatically starts going up. So like Akash said, so it's basically balancing both. on one hand, you are a scarce commodity now in the market because there are regulations and there are anti-barriers which are happening. But at the same time, how good is your innovation? How lean are you? How quick are you? Is what will decide on whether you have been able to get enough interest from the investor to invest in your company.
Sure, thanks. We have only 2 minutes left to close this session, and I wanted to come to each one of you, maybe quick 30 seconds. Ravi, to start, what one change would you recommend to the regulator? I'm sure RBI would be hearing this session as well. Any one change that you want to recommend as part of the current set of guidelines?
I think one would be basically the startup thing. One is like currently we have a net worth criteria of around 15 crores. I think for the startup things, if we have to encourage in a payment space, we can start with the net worth of around 5 crores, and later on, depending on the turnovers or the volumes of that particular entity, this net worth criteria can be increased over a period of time. Just like we started with the prepaid, the PPI things also. That's why one of the criteria, one of the suggestions which I want to give to RBI. Yeah.
Sure. Thanks, Ravi. Devang?
My take is on again on data storage. Again, regulator should permit storage of card data with the payment players because all of them are PCI DSS certified. At the same time, people are again you are a regulated entity, so there is lesser chance of a risk of data going out or anything. You can put larger penalties on if there is any data leakage. And anyway, you're not storing CVV, so or even including case of UPI, you don't have any issues because you're storing only the handle. The whole act is being done by the customer only. So I think yes, it's more predominantly to do with data storage for improving the user experience. It's not about anything else, but definitely for improving the user experience, there is a lot more you can do with that and analytics that you can run on that.
Tushar?
Yeah, well, see now since we are a regulated entity with RBI, obviously it will be a two-way process. And what I would want from RBI is that we should get a voice with RBI, which earlier we didn't have. We had to go through banks. So if there is any innovation which we need to come out in the market and maybe brainstorm with these select set of committees, this will give us a way of how to be able to have a two-way dialogue with RBI on anything that you need to do. And yes, and on the merchant side, what I would want RBI, would request RBI is that the PCI DSS compliances and all is largely going. It's not of any use for the merchant because he does not need the card data. He does not keep the card data. And along with tokenization and things like coming in, you really don't need that kind of infrastructure. Otherwise, all the mom and pop stores and the startups in the who are actually trying to digitize a lot of things would have a tough time.
Sure. Akash?
Yeah, I think great points by all. If I have to add another point to it, it would be that there's this restriction or another regulation about you can have only one escrow account. So I think that anyways having all the escrow accounts are very much regulated by the banks and the RBI. And if you restrict it to just one, it does have a lot, it does, increase your dependency on one particular bank, and it does create some kind of exigencies on how you manage your, payouts to your merchants and other things. So I think that restriction shouldn't come in. So yeah, I think that's the only thing I have to add to this.
Only for one clarification, Akash, I think there is currently 2 escrows allowed by RBI. The recent clarification that has been coming, just for your information.
Yeah, thanks. And I would say basically adding any limit over there may or may not be, productive. Essentially.
Yeah, I agree.
Sure. Thanks. So my quick sort of 30 seconds as a key takeaway. Yeah, I think the introduction of these guidelines is a step in the right direction from RBI. Of course, there are a few points, conditions that merits sort of a revisiting. But I think there's an interesting time for a lot of these payment aggregator acquirer business to kind of try and keep innovating on the product's user experiences, yet being compliant from the RBI regulation standpoint. So I think that's my 2 bits. Thank you everyone for sharing your insights and perspective around these regulations. Garima, back to you.
Thank you so much, Mr. Jain. Thank you to all our esteemed panelists for an amazing session. And thank you to the audience. We will soon be back with yet another exciting session in a very short while. And please do visit our virtual exhibition space to check out our partner booths and their offerings, especially Lyra's booth to participate in a very special lucky draw and win some exciting prizes. So thank you so much to everyone. Have a great day.
Thank you.
Thank you. Thanks,
Thanks, everyone.
Lyra and powered by Moon. Without further ado, I would like to commence our next exciting chat on the topic recent development in fintech in financial inclusion landscape in India. For the same, I would like to welcome Ms. Sushmita Khan, General Manager, Financial Inclusion and Development Department, Reserve Bank of India, and Mr. Loni Anthony, Vice Chairman, Hitachi Payment Services and Co-Chairman, Payments Council of India. Over to you, Mr. Anthony.
Thank you, Shivani, and welcome, Shushmita. I think what we can do is, since you have a presentation to share, maybe we can go through your presentation and then look at what the audience questions are, or any further discussions. We'll post that. So if you're okay, you can go ahead with your presentation.
Yeah. Thanks, Anthony and Shivani. So the topic for today is, I think you have a digital money conference, and the topic given to me is recent developments in financial inclusion landscape in India. So basically, this is the area I'm looking at in the RBI. And I was just looking at the theme of the conference. So it mentions ushering into a new decade, reassess, innovate, reimagine, and ramp up. So I thought it was a good idea to just touch upon what we have been doing and what we are thinking of the way ahead around this theme. So in the reassess part, I think I can cover the initiatives which we have taken up today. Then under innovate and reimagine, I would like to focus on the national strategy for financial inclusion and the national strategy for financial education that we have adopted. And under ramp up, I'd like to just cover a bit about the way forward, what we plan to do. So with this, we'll just go ahead.
Yeah,
this presentation. Yeah, you can hear me, right?
Yes, we can hear you. There's a bit of breakage in between, but please go ahead. Yeah.
Oh, yeah. So this is the outline of the presentation. Basically, what are the different the perspectives on the financial inclusion from RBI's point of view, the initiatives which have been taken over the years. As I mentioned, the two strategies, then some other initiatives which I would like to mention, and the way forward. So under financial inclusion perspectives, at the very beginning, how do we define the financial inclusion? I think all of you being participants in this particular space, you'll be well aware, but just to give a context, we define financial inclusion as the process of ensuring access to financial services, timely and adequate credit to vulnerable groups such as weaker sections and low income groups at an affordable cost. So idea is to how to reach out to the unreached as far as access to financial services concerned, then credit to the various underserved population. So whenever we talk of financial inclusion, we like to mention it in the context of the inclusive growth triad. The financial inclusion policies at one end, supplemented by financial literacy initiatives, along with the customer grievance redressal, and this leads to the financial stability. Under the various dimensions of financial inclusion which we have, there we can segregate into the supply side and the demand side. So on the supply side, we have the broadening of the financial services. Basically, this talks about how do you increase the access, the various access points, and in the deepening of the financial services, we are talking about the usage part. How do you increase the usage of these the services which are available? And the supply, just concentrating on the supply side cannot be enough unless you work on the demand side to create the demand for these services which are available. And how do you do that? Through financial literacy and ensuring that there is adequate consumer protection. Because mind you, you are bringing in people who are those who are not part of the financial system as such, the formal financial system. But in order to nudge them to come over into the financial system, it's very important that you build up their trust in the system. And how do you do that? Through adequate consumer protection safeguards. So the role of the Reserve Bank in financial inclusion are RBI's role is has always been to increase the penetration of formal financial services in the unbanked areas. All our initiatives have been targeted to increase this the penetration, then to ensure the adequate flow of credit to productive sectors of the economy, which we feel deserve credit, but maybe do not have an adequate access to credit, and of course availability of the banking services to all the sections of the people. So this in essence sums up the financial inclusion role of RBI. And the key thrust area for us is what we have the priority sector lending guidelines, through which we want to increase the credit to the weaker sections, to identify the MSME sector, the agricultural sector, and we have our various financial literacy initiatives, sustainable and scalable financial inclusion initiatives through financial literacy. We'll talk about that in detail as we go along. And the third role which we have is of a coordination, the coordination between the various players, and especially at the grassroots level. So how do we do this? This is through our institutional arrangement, what we call the SLBC, the State Level Bankers Committee, and the Lead Bank Scheme. So this in essence is the RBI's role in the financial inclusion and development, FIDD's role in ensuring financial inclusion. So what are the initiatives which we have taken thus far? I think just to brush up very briefly, I'm not going into much detail, but as you would all be aware, like we mentioned earlier, from the supply side initiatives, how to increase the access. Our initiatives have laid thrust on how to increase the access to all sections of society. We started off with the nationalization of banks by the Government of India, of course, and we introduced the Lead Bank Scheme, what we said, the institutional mechanism to enhance the flow of credit at the grassroots level, and more so in the rural sector. We have brought out various policies to increase the rural penetration of bank branches. We are talking about the physical bank branches at that point of time. Of course, now it's a different context. Physical branches supplemented by the various kinds of access points. So for the physical penetration of bank branches, we gave various relaxed norms for opening of banking outlets, subject to conditions of opening branches in unbanked rural centers. Then there was, we introduced this concept of the niche banks, like the regional rural banks, the cooperative banking structure, and of course, very recently, the small finance banks and the payment bank. One path-breaking model which has come into being is, I would like to say, is that the business correspondent model. So earlier, like we mentioned about the bank branches, so physical bank branches not being able to reach each and every part of the country, considering the state of our country, the vastness and the different terrain and the various socio-cultural ethos involved. So the concept of the business correspondent was introduced as an intermediary for providing banking and financial services at the last mile. And of course, technology has played a great role in this aspect, as you all would be well aware. Then for customer onboarding, we have introduced the relaxed KYC norms, especially for the BSBDA, the small accounts, and the provision for digital customer onboarding. Very recently, guidelines have been issued on that. These were from the supply side initiatives as far as access was concerned. Then to increase the usage from the supply side, usage of these various products. So we introduced the no frills account, which is called the BSBTA, the Basic Savings Bank Deposit Account, to offer basic minimum facilities free of charge without any requirement of minimum balance. Of course, after with the introduction of PMJDY, this has got a huge thrust, a push rather, and if you see the World Bank Index 2017 report, around 80% of our adult population have access to bank accounts. So that is a big quantum leap which has happened. The next initiative is, of course, we mentioned this, it is part of the trust area of the RBI, the priority sector lending. So we have a special dispensation for targeted credit flow to the disadvantaged sections of the economy. MSME, the agriculture, the farm sector, and then education, housing, among a few of them. And of course, recently we have brought out various modifications to bring in the newer sectors into the fold. The MSME, like we mentioned, is a very big focus area for us. And lot of policies to how you can increase credit to this particular sector. So it has brought in under the definition of the priority sector lending, and as you're aware, the Mudra Yojana scheme is also a big thrust, is a big like for refinancing of these micro unit enterprises. And under the lead bank scheme, we had this the concept of the annual credit plan, where decentralized credit planning takes place, where at the local level the targets are decided for a top to bottom planning exercise. For each region, banks are assigned allocation of annual credit targets. Microcredit through the self-help group bank linkage program, for which also we issue various guidelines in coordination with the government as far as the NRLM structure is concerned. And this is the community-owned and self-managed informal saving and credit delivery mechanism. So it is a big thrust area. From the demand side initiatives, the stresses on the quality, like we mentioned earlier, there are two aspects. One is creating the demand for the products, creating demand for products and services rather. How do we do that? Through creating awareness, and that is through financial literacy. And the other aspect is the consumer protection, to build the trust in the system. So for financial literacy, we have taken various measures. We have target-specific camps we conduct. Then there's electronic banking awareness and training programs. There are public awareness campaigns. I'm sure all of you must have come across RBI Kehta Hai. It's a huge campaign over the recent years on various topics, especially on digital awareness. So digital awareness, even our governor had come out with awareness campaign on a awareness message on digital usage of digital products. We have this concept of Financial Literacy Week. Every year we designate one particular week in as FL Week, and we choose a certain topic for a very focused campaign. So in 2020, it was on MSMEs, how being part of the formal sector brings benefits to the MSMEs, and the importance of timely repayment, the collateralization. These were various aspects. In 2019, the campaign was run on farmers, how farmers benefit from various facilities which are available to them through the formal banking system. Then one novel concept we have come up with is the Center for Financial Literacy. It's the CFL project. I will talk about it a bit more. This we ran it on pilot basis in a couple of states. Basically, an initiative between NGOs and the banks for grassroots level financial literacy awareness campaign. So earlier we had this concept of the FLCs, the financial literacy centers, which was at the district level, and run by banks. So, but we thought that maybe that it doesn't reach far enough. At the district level, the banks go and conduct camps and they just come back. But what if you involve the community in the various very process of creating awareness amongst their own members? So this idea was born, and so NGOs involved the local community in the FL awareness campaigns with the help of banks, and this is funded by the Financial Inclusion Fund as well as the DIA Fund, the Depositors Investor Awareness Fund. And on the consumer protection side, banking ombudsman scheme everybody is aware of, but its mandate was increased, widened rather, to include NBFCs as well as the digital complaints. And we have issued guidelines for the strengthened internal grievance redressal mechanism. And for digital payments specifically, because of the increase in digital payment, we have introduced specific limited liability guidelines for the customers, as well as the harmonization of turnaround time within which any failed digital transaction has to be resolved. And we have this complaint management system of RBI, the CMS, recently launched, revamped, where any customer can log in and register a complaint against banking service. So just to give you a snapshot, progress in FI, just one aspect. Actually, there are many aspects we cover, like the number of bank branches, the deposits opened, the overdraft in these deposits, the ICT, BC transactions. But for paucity of time, I'm just wanted to show you the number of population served per branch, like from 2010 to 20. If you see, the first is per branch. From 10, it has come down. Number of population being served by each branch. In the rural branch, it was much higher, but it has come down substantially. But the drastic reduction which we see is when we add the access points. So the third chart is about per access point in rural areas, of course. So when you add the branches as well as all the access points, the number of people being served comes down. So the per access point, the number of population accessing it comes down substantially. So this is a big improvement, I will say. Digital financial inclusion, whatever, I think all of you are very well aware of these, so I will not go into this. Only last thing, that 42 districts have been identified by the RBI in the last year, out of which 8 are under that transformation district, PTIO, to be 100% digitally enabled in a year. So we are monitoring these over various parameters, number of accounts converted digitally, one of them, and there are various other parameters also. And this, because of the pandemic, this slowed down a bit, but we will be. We have extended the timeline, but then nonetheless, this is being monitored by us on a like at the central office level itself. So this is the initiative which we have taken thus far. Now we have this year in January 2020 released what is called the National Strategy for Financial Inclusion. This is the strategy for the entire country, basically for as far as financial inclusion is concerned. It is a kind of a roadmap where we have come so far and where we want to go. How do we want to achieve whatever the action plan and milestones we have set out. So at the time when this the work started in around 2018, there were around 35 countries which had their own national strategy, and 20 to 25 countries more were in the process of formulating that. So we are one of those countries. We have finally come out with this strategy. This strategy has been approved by the FSDC, Financial Stability Development, Financial Stability. At the highest level, this approval is there. So the main crux of the matter is the vision of the NSFI is making financial services accessible and affordable in a safe and transparent manner to bring about inclusive growth through multi-stakeholder approach. This in a sense sums up what we want to achieve through the national strategy, NSFI. Of course, there are various detailed action plan milestones. There are 6 pillars on which this all our action plan and milestones are based. I will not go into too much detail, but only thing I'll just tell you very briefly. One is we want universal access to financial services for all. Everybody should have access to financial services, and there should be a basic bouquet of financial services. It is not just opening a bank account. Along with a bank account, having some access to some kind of credit facility as per requirement, then an insurance product, pension product. This is what we mean by having a basic bouquet of financial services. So everybody should have access to these kind of services. And of course, only having an access to a bank account may not be enough. If you look at financial inclusion in a very holistic kind of way, you open an account and then subsequently you're not able to do any transactions. So why is that so? Because there's no income, right? So we have tried to link it with access to livelihood and skill development piece also to this access to financial services. So idea is people who are joining the formal banking system, they should be aware of what are the various livelihood and skill development programs being run by the government. And likewise, those who opt for these programs should be nudged to entering the formal financial services sector. The next pillar, the 4th pillar, is financial literacy, a very important aspect. If you do not create enough awareness then all these efforts will go in vain. So it is, the idea is making financial education easy to understand by the target audience. And the CFL initiative, which I had mentioned earlier, customer protection, we have discussed at length, very important aspect of any FI public policy initiative. And last but not the least, definitely not the least, very, very important aspect is to have effective coordination amongst all the stakeholders. Stakeholders, we mean government, we mean all the regulators, financial service providers, and civil society also, in their own way, in different aspects of implementation of the FI strategy. We want to have coordination amongst all these players. Next, we come to the, we launched the NSFI in January 2020, and in August 2020, the NSFE was launched. This is the National Strategy for Financial Education. Just a small quote I thought would be relevant. I hear and I forget. I see and I remember. I do and I understand. So any financial literacy, for that matter, any literacy, unless you have the practical aspect ingrained into a campaign, it is very difficult for the people to register the concept. So that is why this is the idea of having practical aspects ingrained into the financial literacy campaigns. So under the NSFE, we have various dimensions for the life stages of the target audience, then based on geography and of course sector specific, with stress on each area. Like in the sector, we say the focus should be on small and marginal farmers, the MSME sector, and the skilled, unskilled laborers. And this, you would agree, all of you would agree, would have has had a huge impact during the recent COVID pandemic. We realized like this is such an important segment for which we need to create financial literacy. So there are various approaches. There we have what we call the 5C approach under the NSFE. 5 C's being content, developing the appropriate content on financial literacy. Then developing the capacity of the FL counselors or those who are disseminating financial literacy. Then this under capacity, we also say that under capacity. Hello.
Yeah, we're there. So yeah.
Yeah. Okay. So under capacity, we are saying we develop the capacity of those who are disseminating the various and all the institutions involved. So it's a approach. Then we move on to community. We want to involve the community in a huge manner in all these approaches for disseminating financial literacy. Like we said, any financial literacy has to be target-based and with customized content for the end user. So if it doesn't have customized content, then it is of no use. How do we do that? By involving the exercise. Communication, how you can involve, bring in novel methods of communication using technology. Technology is a big enabler in this regard. And again, like the NSFI, here also collaboration amongst all the stakeholders. So I'd just like to add here, while formulating the NSFI as well as the NSFE, we have had detailed discussions like the government, the regulators, the financial sector regulators, telecom service providers, and also the civil society, banks, various organizations, even the SROs. And based on their input, these strategies have been formalized.
Yeah, so I request you to keep little time for questions also.
Yeah. So I'll just these initiatives, other initiatives. Very recently, we have had a review of the IT sector guidelines. The trades, I think, platform, you all will be aware of this. Co-lending, we had introduced the concept of co-origination, which now we have changed to co-lending based on the market feedback. The MSME definition has undergone change recently, notified by the government based on turnover and investment in plant and machinery. The CFL project I have covered. One thing that we have set up a National Center for Financial Education. This is by the 4 financial sector regulators. They have set up this institute for dissemination of financial literacy. and they were involved in the document. A regulatory sandbox. Payment systems, people would have mentioned about this.
Yes.
Retail payment is the cohort currently which is being done, and two entities have gone into the space. And one thing we are working on is on initiatives to strengthen the business corresponding model. We are taking a review and some feedback and surveys we are doing. So how you can strengthen this. Very shortly, way forward. Leverage on fintech. I think all of you are the masters of this, of course. But one with responsible innovation. That is what we want to say. With there are so many things which have to be taken in mind, like the cyber security, the data customer protection, grievance redressal, capitalization, legal regulatory issues. Credit information, like data-driven lending, I think is the word. Broadening of FI means the financialization of service we are saying, not just one product, but a bouquet of services. Improving financial capability through the, one is the CFL project, but there are so many others. The NCFE is going to play a huge role. We need to have a robust consumer protection mechanism, and coordination among the is something. So just I'd like to leave you with a thought. Like all the financial inclusion efforts we are doing, I think it's like the tip of the iceberg. So something which is visible to us, the reasons which are visible to us, the access part and the infrastructure part. There are so many other factors which maybe do not come before. I think all these are the ones we need to look at, so that we can bring about holistic so just I want to leave you all with that thought from my side, and over to you, Mr. Anthony.
Yeah, thank you so much, Sushmita, for this very good presentation, primarily because I think there was a lot of education to the delegates and audience about how you are broadening the financial services, deepening the various activities in financial inclusion, how literacy and consumer protection are going to be key for you to kind of take it to the next level. We were also very happy to hear about you talking about the success of BC and how you plan to expand the BC activities. Would you like to give us a little bit more flavor around that as to what are the areas that you're looking for? Because I think a lot of people in the payment and payment system operators would like to know a bit more about that.
Yeah. See, actually, VCs, the instructions on VCs are not issued by us. It's the regulatory department. What we are doing, we are trying to enhance the capacity of the business correspondents in a big way. So we have introduced various measures over the last 1 or 2 years. One is that the Train the Trainers program, a TOT program, which we call it, like to the banks. This is a 2-tier program. So the faculty members of the banks are they come to RBI and we conduct a training program for them, and then they go back. These faculty members conduct training program for the rural branch managers, who in turn handhold the BCs, subsidize the BCs. So this is how we are wanting to build up the capacity of BCs. Second part is BC certification program also we have introduced through IIBF. So there's a course curriculum introduced, and it's so as to bring about uniformity in the BCs. Like you will find that the BCs and the skill sets of the BCs vary. So based on the feedback, we have harmonized the course content for the BC certification program also. And we have also introduced a BC registry. We're trying to get details of all the BCs under the registry, and we are creating areas for these BCs, so that these can be pointers to the banks also. Like they can, based on the location, and any customer who logs in and is in his area, in his or her area, which are the BCs available to whom they can go for services. So this is a work in progress.
Okay. And what are the measures that you're looking at the offline payment space, particularly for authorized payment system operators? is where we can provide offline remote payment opportunities, and that can extend payments into rural areas.
Yeah, I think this maybe our payment system will maybe better equipped to this.
Okay. Okay. Yeah.
I would recommend it.
Okay. And as financial inclusion is becoming a reality, how does one ensure that the objectives of cost and safety are not compromised? What is your view on that?
Yes, I think that's a very pertinent point. Cost and safety is extremely important. So, see, in our strategy also, this is something which we are, if you see strategy, that affordable, available, affordable, these are very important components. And like in our private sector guidelines also, when we are towards these sectors, when we are wanting to encourage credit, we have something we call the ACT, the adequacy of credit, the cost, and the timeliness. These are very important factors. So this will have to be taken into account, I think, by all the players in the market also. How do you bring down the cost of the services? Like if you see, we are moving from high value volume to value high volume transactions. That is I think the technology has a big role to play in this, which it will be the technology which will be helping us in at the same time, we have to have adequate safeguards in place. Like for fintech also, the underlying is it has to be responsible innovation. So what are the security, the regulatory aspects have to be looked into. Data confidentiality, then the cyber security. So from our point of view, I think customer awareness is a very big issue which we need to create, and also the trust in the system, the adequate consumer redressal mechanism. These two will have to complement each other. Be brought about.
The other thing is that India has adopted a very inclusive system of getting more and more people into the banking system. And most of your initiatives, as you suggested, starts with having a bank account. But as you expand the services, is it always a must that you need to have a bank account, or we can have other services being provided without having a bank account? Because there are many countries in the world, as you know, even in a country like US, which has got 340 million people, only 200 million bank accounts. So how do you see that? I mean, what is your perspective around that?
Actually, it's very difficult to say. See, because you are asking the central banker. So
no, more like a policy. I know it's more of a this thing, but we have adopted more like a this thing where we need to have most of the initiatives, which is driving towards getting people onto the banking system. But at the same time, you know that unless they use it for other activities, that bank account just lies there dormant. So, yeah.
See, so bank account, if you see, by and large, we are following bank-led FI model, but over the period of time, it is also moving towards other enablers also. The other non-banking system participants also are very much there. So that is why what we are saying under the NCFI, we are saying it's a bouquet of services. So we just don't say that it stops with, like you mentioned, just having a bank account and then you don't use it. It doesn't help. So that is why we are saying that we think it's very important to have a bouquet of services which are enablers and which help you further, like to come out of your poverty or for income generation. That is why that entire gamut of services have to be not just a bank account, but also insurance and maybe a credit-linked product with bank account and a pension product also. So that we give in kind of social security. So that under NFI we talk about okay.
Yeah, and that's where it was very interesting to hear from you that you linked it up to livelihood and skill development also as to how. And are you planning to involve the private sector also in this whole area of livelihood and skill development, and any plans around that?
See, right now it is that under the NFI, whatever government services are available, the programs are available. The awareness should be made, like awareness should be created about it, so that people, it is like a two-way system. People who are joining the bank, formal financial services area are aware of these livelihood programs, and those who are already participating in the livelihood program, they are nudged towards the formal financial services. So that is the.
Okay, thank you very much, Shushmita. It was really nice hearing from you on all the initiatives that RBI is taking on financial inclusion and the literacy aspects around it. Unfortunately, we have run out of time, and so we'll have to wind up. Thank you very much once again. Is there anything else you want to add, Shivani?
No, thank you so much for such an informative session. Thank you to the audience. We will see you all in another session with shortly. Please stay tuned.
Thank you.
Thank you.
Thanks.
India and Lyra presents Digital Money 2020 powered by PhonePe. Let us start a panel discussion on tokenization, the go-ahead model for Indian payment system. I will start by introducing our moderator for the session, Ms. Gitika Raheja, Director, Payments Transformation, PwC. Welcome, ma'am.
Hi, everyone.
Thank you, ma'am. Now, welcoming our panelists for the session, Mr. Pramod Mulani, Senior Director and Head Digital Innovation, Partnerships and FinTech, Visa. Ms. Gunjan Pradhan, Payments Head, India, Netflix. Mr. Nalin Bansal, Head, RuPay, NCMC, and NFS, NPCI. Mr. Vijan Venugopalan, Head of Tokenization, South Asia and Southeast Asia, MasterCard. Welcome all.
Hello, everyone.
Before I can request Ms. Raheja to kindly take this forward, I'm requesting all the attendees to kindly put their questions in the chat box, and the panel will address a selected few at the end of the session. Over to you, ma'am.
Thanks. So I think through the sessions that most people would have attended, everyone would have heard about the digital payment story that India is going through right now, right? And I think anyone who's following the story would agree that India is firing essentially on all cylinders right now. I think two trends which are relevant to our topic today is the growth in the mobile payments and the merchant side of the story, and also the entire credit card growth, which I think has come as a bit of a surprise to a lot of people in the last couple of years. The tremendous growth that we see on the card side, mostly on the credit side. So I think these two trends, as well as the fact that we have an active regulator who's kept everyone on their toes for the last few years, I think all of this lends itself very well to this topic, our topic for today, which is around tokenization. So last year, RBI essentially came up with the regulation to allow card tokenization in the country, and essentially, I think the essence of tokenization comes from the security point of view, but there is this whole aspect around customer convenience and customer experience that gets enhanced along with it, right? Which is something I think we in India need to start discovering a little more. And I think some of these things are topics that I'm looking forward to discuss with the panel today. So let's hear it from the panel what they think about this whole tokenization story in India. So maybe starting with Nalin, then we can do Gunjan, and then Pramod, Vijan. All your views, initial views around how this tokenization story is developing in India. Over to you, Nalin.
Yeah, thank you, Gitika, and good afternoon, everyone. Feeling really excited about things. Lot of interesting ideas to talk about. Um, so, from RuPay perspective, from NPCI perspective, I think for us tokenization is something that has been there for a good number of years. I think international markets, my peers from Visa and Master will validate that. It's been around for quite a number of years. I think it's evolved over a period of time, and now it's kind of reached a place where certain nice, interesting use cases are emerging out of it. The way, I think the way we've approached tokenization has been slightly different. Of course, for us, UPI is a way of tokenizing certain transactions. It gives you a virtual ID, and then you can start doing your transaction using that ID. I think tokenization in its current shape as being discussed is a natural progression for card transactions to move into that regime. And of course, with the new developments where you're now looking at third-party tokenization and third-party applications are getting involved into it. I think there are some good days ahead. A lot of learning still yet, I would say. As an industry, we've moved from MaxType to EMV. It has taken us 4 years. We've still not done 100%. Getting people to move away from physical cards to EMV cards to tokenized card, I think will take some time and a lot of consumer engagement process. But I think it's the right time to start looking at it. I would say, and start looking at some new use cases around it.
Thanks, Nalin. Gunjan, your views?
Thanks, Gitika. Good evening, everyone. When the conversation of tokenization came up, I think it is an interesting one, particularly for us as merchants. Because from a merchant perspective and from a consumer perspective, I truly believe tokens are the future for secured payments. While we are on this thought, it is important to give some context around PCI DSS certification and most importantly around level 1 certified merchants. Now, PCI DSS are globally accepted and adhered norms, and the protocols that are followed by level 1 certified merchants are the same security protocols that are followed by payment aggregators, processors, and issuers globally. What this means is these are rigorous standards to encrypt and protect payments and card data. And these merchants don't really store card data in the PAN format, but they store it in a clear text format. What that means is it devalues the stored card data and reduces the incentive for anyone outside of the system to attack the system for their financial gain. Why is this context important, you ask? And that's because many customers prefer to save their card credentials with merchants for a convenient and a frictionless checkout experience. And data suggests that in the last 3 years alone, this practice of saving card on file has gone up significantly. And in order to secure that card data and thereby payments data, simply moving this card data from one place to the other is not really going to protect the data. What will protect the data is mechanisms like tokenization, which is really deployed to protect the customer card data by adding extra layers of security over the PCI standards. And while PCI DSS level 1 certified merchants can be trusted with card data, and the same cannot be said about other merchants, what tokenization offers is a technology that can help create a sustainable, safe, and a scalable card on file ecosystem. And really, from that point of view, feel that if you're talking about a future of secured payments, tokenization cannot be missed from that conversation.
Yeah, that's a great perspective, Gunjan, especially from the merchant side of it. And I've also actually heard counter views around, do you think tokenization is a double-edged sword where people think they're not actually they're storing a token and they need not be PCI DSS compliant in that case, since they're not actually storing card data, right? So yeah, we'll probably delve a little bit on that. Pramod, maybe over to you.
Yeah, I think, both Nalin and Gunjan have called out some interesting views around tokenization, and I would echo both of them. It's important to start somewhere rather than waiting for things to evolve and not start at any moment of time. What I would definitely call out on tokenization is, it's something which is global, it's accepted, it's proven that it is successful. It has reduced fraud. This is something that's white papers and multiple of them published globally, that how it helps reduce fraud in countries where there is no 2FA. Obviously, I'll just make that disclaimer. But in India also, with 2FA already playing a very, very important role in the way India has evolved, there are still some frauds that happen because of consumers being a little careless, some attacks that happen on merchant, and there are different reasons why fraud happens, right? So it can definitely, to a certain extent, address those frauds as well, protect the consumer against card phishing, card being misused, and customers being called to share their OTPs and so forth. So it can address wide variety of cases and prevent fraud. So it's definitely an important step in that direction. And the way tokenization is now being implemented with 2FA, which is very different from the standard 2FA that happened in India, which was a 3DS1 protocol, to the way tokenization is now implementing, its 2FA. I think seen with our implementation is that a standard authentication and authorization blended approval rates are in the range of 78 to 80. With tokenization, we are seeing in excess of 91. So I think it not only helps, protect against fraud, it definitely enhances consumer experience. And then if more number of transactions get processed, that means there is more digital transactions happening in the ecosystem. So I think it addresses not only the merchant's concern, but also addresses consumers' concerns and the PAPGs. Everyone in the ecosystem is actually taken care of and the transactions are very safe and secure.
Great. Thanks, Pramod. Vijay, initial views?
Hey, hi everyone. This is Vijay. I echo to what Pramod said earlier. See, with COVID-19, a lot of things have changed around the globe, right, and especially in India too, right. So consumers are embracing digital commerce, more than ever, right, and we've really seen that stride in digital commerce or digital payments, as we call it as, right. So again, there's a greater consumer demand for mobile banking, digital wallets, etc., right. So what it simply means is that from a fraud perspective, the digital fraud is becoming more and more sophisticated, right, day by day, right, and there are, more the number of digital users. That means you have a proportional number of digital fraudsters coming into picture, right, and there's increased fraud risk across the board, right? So so for me, the way I look at tokenization is, in three important aspects, right? So number one is we will have to reduce the exposure of the payment credentials in the wider ecosystem, right? That's one important thing that we need to do, because as consumers, it's easy for fraudsters to impersonate and get our payment credentials, right? Now, is there a way we can reduce that exposure of payment credentials? So that's one thing which we will have to see, right? Number two is, in the event there is an exposure, right, how do you mitigate the impact, right? So we cannot, foolproof, we can't foolproof the system, right? And I agree with Pramod that, is there a 100% possibility that the entire, card ecosystem moves into tokens in the next 5 years? May or may not, right? So basically what we'll have to look at is, in the event of an exposure, how do you mitigate the impact of that exposure, right? And number three is building that, trust across the ecosystem, right? It's not something which, let's say card networks like us can do or a merchant can do, right? I mean, we need that entire ecosystem to be, glued into this whole tokenization story, right? So that there's a better trust in this whole ecosystem, I would say, right? So I would say tokenization, yes, it's an answer to, the concerns that we see in the digital payment ecosystem, but that's not the only aspect that we'll have to consider. We should look at other aspects too, which is like layered on top of tokenization.
Absolutely. Thanks, Vijay. So now now that we've got initial thoughts around, how the merchants are looking at it, how maybe UPI is also one form of tokenization, and how PCI, it obviously increases the trust in the entire ecosystem, but there is still a lot more to be done, and the onus is just not on the merchant as well as or the card network, right? It's the entire ecosystem, from issuers to processors to even the customer themselves, right? Understanding the entire flow. So with that, let's kick off maybe to understand how does the entire tokenization experience in India, uh, everything from the uptake to how the process is actually followed. How does it compare to maybe some of the global counterparts? So maybe Pramod and Vijan, if you all can give your views around how it compares to how it's done globally.
Sure. Should I kick it off?
Yeah, Pramod, you can go on.
Go on, Vijay.
I think Pramod, your turn. Go ahead.
No, Vijay, go on. You started, I guess.
Okay, sure. See, I think let's understand what is tokenization, right? I'm sure, as being in the payment industry, for us, it's a day-to-day affair, right? So we all understand tokenization, right? So
yeah.
See, if you step back a bit and understand what is tokenization, it actually simply means that, instead of storing, an actual, payment instrument somewhere, right? We are storing it as, a kind of a surrogate value, right? So that the visibility of that, of that surrogate value is known only to the industry participants, right? And not to a fraudster, who has the ability to, let's say, hack into a system and, fetch that data, right? And tokenization has been used, extensively in the e-commerce space, and I'm sure, Gunjan would agree to me that it has been there for, many years, right? So where, instead of a card number, it gets replaced with a, let's say, a string A, B, C, D, E, so that, those merchants don't have to be PCI compliant. Right, so this has been there in the ecosystem, right? However, the global standardization of this tokenization, and in fact, started almost, I would say 6 years back, right, where it became a standard under the EMV umbrella, and we call it as EMV tokenization, right? For the last 6 years, we've seen that adoption grow to close to 100 odd countries, right? And it has been embraced by all the large digital players. You name it, and you have all of them embracing tokenization, including large e-commerce merchants as well, right? Wherein it brings in a better trust assurance levels to the wider payment ecosystem. Right? Adoption of tokenization in India started, around 2017, I would say, with the launch of, Samsung Pay, right, where, post which there was, of course, a pause for about 1 to 2 years, where RBI was, really trying to understand more on tokenization, and thanks to their support, that there was a guideline released in early 2019. Post which, all of us in the industry, we work towards enhancing our system to adapt to that, standard, right? So, and we have now we are actually seeing, some of the wallets using tokenization already, in the market, and you would have seen some of the, press releases in the last couple of months, I would say.
Yep.
Yeah. So your specific question on how we in India are seeing this pattern evolve. So as we called out, RBI came out with a regulation early Jan 2019. What they definitely did was put in incremental conditions the way it has to be implemented for all the right reasons. It put in checks and balances as to who can be a token requester, what is the role of the network, what are the roles for banks, a yearly audit mechanism to be put in both for the token requester, for the bank, and for the network. So I think all the guidelines and frameworks have come in, which are relatively different from what a typical tokenization implementation would happen in different parts of the world. In addition to customer security around 2FA, which is mandated on tokenization as well. So all those things have now been implemented, and as you would realize, these incremental conditions take some time and effort with the banks, with the token requester, and with the network to build in and roll out. So we've rolled it out in the last few months, and as I said, we're seeing some very, very interesting data. Obviously, on both authentication and authorization PSRs, which are upwards of 90. So talks that is a clear call out that the success rates are obviously ahead of what they were on a typical standard PAN. And obviously, with no fraud reported, we can safely assume that it's safe and secure as it has been called out in different parts of the world. So we would believe that we've implemented a different version from what has been implemented as standard tokenization, which was only across e-com. In India, you also have a scan and pay use case, tap and pay use case, and an in-app use case. So all those incremental conditions have now got built in, and we believe it will scale up over a period of next 12-18 months.
Right. Perfect. So you're saying the time is actually right now, where all the groundwork has already been done, and now it's really about it taking off.
Yeah, so all the plumbing has been put in place, which is very, very important, right? In any infrastructure project, you would agree that banks have to make significant effort to putting the plumbing around, merchants have to do it, the ecosystem, payment aggregators and all have to come together. Have we done the job fully? The answer is no, but we believe we are in a good shape from here to take it to the next level.
Yeah. Thanks, Pramod. Thanks, Vijay. So, talking about it taking off from here, right? So, Nalin, do you think some of the use cases that'll really help it take off, right? And maybe in some of the other countries, like I think Southeast Asia, Australia, we've seen a lot of implementations around transit with tokenization, right? Do you think these are some of the use cases that India also needs to start building around for it to really, take off in that sense?
Yeah. Important to build certain use cases as we look at this technology. As we look at this and this challenge of security, and then we start looking at other options. From a physical payment, what we call as in-store payments or physical payments. We call it physical payments, not offline, for different reasons. But for physical payments, I think it kind of entered, with Samsung Pay, Vijay spoke about. With Samsung Pay, it was a lot of physical payments, in-person payments, and eventually, I think the consumers have realized that, or maybe the market is slowly evolving, saying, for me to do something on the phone and tapping my phone, I need, of course, my phone to be a smartphone, and then over and above, I want my phone to be an NFC-enabled phone. And I'm not sure that, as payment industry, we have aligned ourselves with phone manufacturers to ensure that there are low-cost phones available with NFC technology. So the in-person payments need a little bit of more work in my mind, and then I think more at an industry level, so that you don't have to worry about phones being there. So as far as your question is there on the transit side, I think it has a great use case, if you ask me. But it requires a lot of work around working with the phone manufacturers to ensure that this is in the hands of everybody, and it's not specifically on a certain type of phone, because that breaks the experience. I will download an app, suddenly I realize I can't do anything because I don't have NFC. So that's one part. However, the long-term use case that has been, I think, globally is being seen is on the e-com side. I think there's certainly a certain, some value around that. And for in-app payments and stuff like that. But is it like Pramod also pointed out, is it something that replaces? So for example, in a country like India, where we are already doing two-factor, now RBI has gone one step. Ask banks to just take away the e-com payments from all the domestic cards, international, e-com payments, international contactless payments, take away that functionality from the card if it has never been used in the last 6 months or whatever that time period is. And for new cards, it is by default, it is switched off. I think there's a very, very, very strong view out there in the market if you look at the greater ecosystem. And is it a replacement of the current security challenges in domestic e-com payments? I'm not too sure about that. Maybe yes, it helps some way or the other. It certainly helps when we're looking at single-factor authentication, but in two-factor, I'm not too sure. But to my mind, it's a greater convenience part, because being able to store a token and then sort of fluently complete a transaction helps you, sort of makes your life a little easy. It's like card on file. You may not have to enter a CVV also, and then if you are able to build it, merge it along with the scheme-based authentication, then you've got a great use case out there. So I really think that on the online space, we can do some magic. However, there's a word of caution, and then that's what I was sharing with all of you, that while some of the large merchants like Netflix and some of the others may have embraced it and they've adopted it, on the issuing side, it's a whole lot of banks. Some of them are, of course, very active. They would have, in fact, a lot of banks tried tokenization on their own 3-4 years back, but they realized they can't run their own apps and move to third-party apps. But a lot still have to do something about it. And I think before we can make it a market, before we can make it an EME-led kind of a solution thing, everybody does it. Even RBI is saying you can do it if you want to. It's not saying that you have to do it. I think some good wins need to be called out. I think then it'll become easier for all of us to get this through the market.
Right. Thanks, Nalin. So Gunjan, we spoke about how e-com may really be, the use case to start with, and larger merchants like Netflix have implemented it. But do you think for the Indian consumer, given the demographic, given the other options which are available, and subscription tends to be the most common use case that gets implemented, right, to start with. But do you think for the Indian consumer, it will turn out to be, can it compete with some of the other options that are available? Are you seeing that? Gunjan, I think you're on mute.
Yes, that's an interesting question. Thanks, Deepika. And candidly, card tokenization and recurring payments are not conflicting. They're complementary. And I think all the more valuable from an Indian consumer point of view. And the reason why they would look at it more favorably is the benefits of consumer experience, a better consumer experience, along with card security. That's the way I look at adoption of tokenization in the country. And I think Nalin made an excellent point around ecosystem adoption and larger issuance also being participating more aggressively in this. And that's something that we get at later. But when you talk about card tokenization, particularly in India, and I think the fear around card safety, card tokenization becomes that perfect solution, which comes in as an enabler that helps particularly recurring card payments drive higher retention, while making payments secure and more trustworthy. And I think throughout my conversation, I speak about secure and having more trust a lot more, because I think that rides at the heart of online payments, whether it is the merchant being concerned about fraud or the consumer being concerned about their card safety. India as a market has been very slow to adopt some other technologies as well, which foster easy card updation, like account updater, for example. If I look at my data, expired cards happens to be one of the highest decline reasons for Netflix in India. India also has a very processor-centric card encryption technologies, which are, I think, functioning as ad hoc proxies for tokens. And since this is unique to every payment processor, they become a deterrent to interoperability in the true sense of the word. Tokenization as a technology then comes in to address all of these gaps, while enabling secure card payments and card on file storage. So if I were to give a little more data basis, some of the things that Vijay and Pramod also mentioned, from a merchant point of view, globally, Netflix has been an early adopter of tokens. We don't have it in India because we're not allowed to, and we would love for us to start in India. Since 2017, today we're in around 27 markets where we process tokens. And on the retention side, we've seen churn improved around 17 bits on an annual basis. Even on chargeback rates, we pride ourselves at having one of the best fraud prevention techniques globally. But tokens has helped bring it down further, so much so that our chargeback rates are lower than 2 bits in some of our regions. So I think this goes on to speak about the benefits that tokenization drives, not just for the merchant, but eventually for the customer who sees value in being able to save a card safely with a merchant because a merchant has subscribed to technologies like tokenization.
Yeah. Great point, Gunjan. So I think we're all heading to the point where e-com, recurring payments, these can become the key use cases to drive the adoption going forward? And hopefully, we should start seeing some traction both from the regulator around that area and also the participants in the entire ecosystem. Which brings me to my next point, actually. So how do you see the adoption on the entire ecosystem side, Pramod? Everyone from issuers to processors to customers to consumer apps. What's been your experience around adoption? Because I mean, generally, I think the view is that it's been slow, and we should try and understand why it's been slow. But let's first understand: is it really slow, and what is the general experience around adoption?
Okay, so let's demystify this thing around tokenization. So what's basically happened is what RBI has given us an approval for specific use cases, which says in-app tap and pay and scan and pay. These are capabilities that RBI has approved and said that issuers and banks have to enable this, right? Now there is a general concept of tokenization, which if you see Gunjan called out that it's not allowed for Netflix, which is called card on file tokenization, which means that whether you come from a web, whether you come from your mobile app, you are able to use tokenization to just use your token and not your card number. Now globally, networks have developed technology which can do on behalf tokenization and enable that use case say tomorrow. So network stands in to do what a typical bank would do to create its capabilities. And if the regulator says in India, hey, tomorrow you're approved for card on file tokenization, can you enable all the Visa banks in India? We would definitely say yes, because we can stand in and actually do the tokenization for the bank till the bank actually gets onto its capability of building that infrastructure and all. So globally, we have that, and I'm quite sure MasterCard would have a similar ecosystem. And I guess networks like RuPay already has something like this on UPI, where there is all the address and so on and so forth. Now, what we've done is what RBI has approved is a more complex use case in terms of saying what can happen with the participation of third parties, like we announced with Google and so on and so forth. It's an in-app specific use case. There is scan and pay, there is tap and pay, and all that stuff. Now we had to put the hard work of certifying banks for those use cases. We had to do the hard work of implementing what guidelines RBI had put in place to get this implemented, and hence that runway was much longer than what a standard card on file tokenization would have got onto the table. So as we speak, obviously there's a lot of hard work on these specific use cases, but I think we cover a good reasonable number of banks with these specific use cases. And with COF, as I said, we can stand in for a tokenization for majority of the banks. So 2020, 2021 will be an inflex point for the scale of tokenization, as I started with, because not only Visa, but the banks have built those capabilities, and by the ability to stand in for COF or tokenization, I think it'll go to the next level altogether.
Great. Thanks, Pramod. Coming to our next point around how do you think, Nalin, this stacks up against an already overheated mobile payments market, where a lot of these use cases are being implemented, right? For you, like you mentioned, UPI itself is a form of tokenization, right? So how do you think this stacks up against some of the already existing use cases which have widespread adoption today? You're on mute, Nalin.
Yeah, sorry about that. If you ask me, I think something what Pramod spoke about, if you look at the credit market, if you look at the credit cards in general, a lot of credit issuers, I think, have embraced this, and they've sort of been very forthcoming in adopting this this solution. And I think if I look at the credit card issuers, certainly their consumers will have a way to now tokenize themselves and experience in-app payments, experience some of these online payments, or scan and pay or tap and pay. And I would say that is something which is still not yet available on credit issues today on UPI. So I think there is space. There is space today, but can it come on UPI? Of course it can. It's just it's a point of regulation. Nothing stops. So there is. But if you ask me, there have always been more than one ways to pay, and I think as an ecosystem we've solved payments more than we've solved the other parts of the story. People have options to pay using wallets. They can pay using credit card, debit card. So many options are still there. And net banking. Imagine net banking is still working today.
I think India
So-
is having a problem of plenty currently.
So I'm saying for online payments, you also have net banking. And I think commercial plays a role.
Yeah.
Because which payment mode can be merchants are going to adopt that, right? If tomorrow a payment mode is going to be more expensive, be it token, card on file on token, and all those things, then I mean the commercial part is so important for them to make a choice on what payment mode, which is why net banking is still relevant, because that's for some of them it's one of the cheapest payment mode if you look at high value payments today. So I just think that it will be it's okay. I mean, it's okay to have one more option out there. Eventually, the mix between what is more beneficial to the consumer, what's more easier for him to do, and for a merchant, more importantly, because there's with the PAPG guidance, there are so many other things that he has to take care of now. Plus, what is more cost effective? I think those modes will evolve. Um, um, but I think it's not something that it is it will. Of course, what it will not be, in my mind, it's not something that can groundbreakingly take over something. I don't think that is the point right now. Really, that has to be seen.
Okay. Thanks, Nalin.
Yeah.
So just coming to the fag end of our discussion, Vijay, maybe from your end, if you can just understand, what do you think that India needs to do for it to really take off? Pramod spoke about all the groundwork being done. What is the next phase? Do you think it can really just take off on its own, or there are still some tweaks required? Maybe Vijay, your view, and then Gunjan, you can also follow it up, maybe from the merchant side of it, if there is something that you think really needs to be done.
Sure. So, yes, I agree with Pramod and Nalin's statement that, we've already done some bit of a plumbing in the India market, and we are getting into the right direction, number one. And agree to Nalin's point that, yes, commercial aspect of it should be taken into account, because, as Gunjan mentioned earlier, there is the benefit that you see in terms of overall approval rates increasing, right? So, of course, there's naturally a benefit coming back to the merchants as well as consumers, and of course that might be at a additional price, right? So which is something which needs to be defined at a market level, right? While we spoke a lot about security, right? So there are a couple of other things which we'll have to look at, right? See, tokenization, if I just step back a bit and look at it, it's basically building a bridge, right? A pipe between the e-commerce merchants, right? Or it could also be, let's say transit authorities, all the way back to the issuing entities, right? It's actually a pipe that is getting built, right? Which provides, better visibility from a consumer point of view. Like, for example, if, for me, my banking app is my most trusted app, right? I'm sure it is the same for a lot of consumers, right? Now, if I have the ability to, log into my banking app, and I have the ability to push and say that, hey, today I'm going to use my card at XYZ merchant, just by a click of a button. If I can just push my card as a token at those e-commerce merchant, wouldn't it be nice, right? Number one. Number two is, there are a lot of these recurring payments which can happen either on a monthly basis or a quarterly basis, and in certain cases on every year, right? Like insurance payments, right? So is there an opportunity for me as a consumer to, let's say log into my banking app and suspend my token, for example, right? Because I want my token to be active only when I need it, right? Why should I keep it active at a merchant, for example, 365 days a year, right? It doesn't make sense, right? So this is what we call as some, in-app provisioning, right? Or app-to-app provisioning, or, where, it's about, giving that choice to that consumer, which this pipe is able to establish, right? So we're basically building applications on top of the pipe, right? That's number one. Number two is the control, right? So today, let's say I lose my card, naturally, I have to, as a consumer, the banks are going to block my card. And I also have to go to individual websites and kind of delete my card and, re-register my card, right? I'll have to go through a lot of pain. So with tokenization, what we're saying is we are bringing that granularity in terms of the control that a consumer would get, right? So they can go to merchant XYZ and say that, hey, remove my token from these places while my physical card remains active, right? So these are, some of the use cases, like, the provisioning, better control. And, I agree with Gunjan that approval rate is something which haunts every e-commerce merchant, right? And that's an area that, we'll have to focus on. And we've actually seen, good amount of approval rate increase with tokenization, right? Now, I think all this can be, combined. And another big problem, I think, in India is standing instructions on debit, right? Which is not allowed across, most of the debit cards. And primary reason, I understand from a regulatory point of view, it's primarily because what happens if your debit card is lost and, you've inserted your card at a merchant, so there's no control, right? And that is exactly where I was talking about that pipe, right? Which, gives a control for consumers to, call their bank or to log into their banking application and control where their payment, instruments are used, right? So I would say that, when we combine all this as a full story, there's a lot of benefit being, provided both for, the ecosystem partners as well as to the end consumer.
Thanks, Gunjan. Gunjan, parting thoughts.
I think from the point of view, or from the point of questioning with regards to what can India do differently in order to make sure that tokenization realizes its full potential, I candidly don't think we need to do anything differently insofar as the implementation goes. Tokenization, like Pramod and Vijay also pointed out, are globally well-designed and tested EMVCo guidelines and standards, and they are meant to be relevant for each of the markets that they get introduced into. They're meant to protect consumer and consumer card data from fraudulent attack and abuse. What we really need to do is for RBI to allow card-on-file tokenization to happen in the country in line with the global EMVCo standard, so that card-on-file tokenization can provide the benefits that it promises to for all the consumers at large. And I think what is also needed is, again, I think Pramod or Vijay, and I think at one point in time, Nalin also made this point, where the key for tokenization success is market education and acceptance on the benefits of tokens. So I think as long as there's concerted support from all relevant stakeholders to make scheme tokens successful, it would really help realize the true potential of tokenization.
Great. Thanks, Gunjan. So let me just quickly summarize, and then we have a few questions, and I think we are already on time. So just quickly, in terms of, I don't think there's any debate around the benefits of tokenization. I think we unanimously agree that there are plenty of benefits on the security side, on the customer benefit side, customer experience side. Recurring payments is a great use case. E-com is a great use case. I think card on file needs to be enabled from a regulatory standpoint, and that will probably help the push that is needed. I think we have some way to go maybe on the commercial side, right? Customer education side, I'm not sure if the entire ecosystem completely understands. It sounds like a very technical term to a lot of people today, but I think it just needs to be simplified a little, both on the customer side as well as acquirer as well as issuer side. We need to start looking at a few more enhancements in terms of the controls that can be established for the customer. Examples being provisioning, approval rates, focus on some of these areas. And I think we can still see some way, but given the Indian ecosystem, there's still going to be, competition from other payment modes. So will it really take over the Indian market like it has some of the other payment, other countries? Remains to be seen. I say that with a bit of pinch of salt, but I think we are poised perfectly to actually see how it goes from here. At least we shouldn't be saying that it's still in a work in progress. All the groundwork seems to have been done. So now let's see if it can really take over. So just moving on to a few questions. So the first question is, what are the main reasons around the slow adoption of tokenization in the country despite its intrinsic value? I think we spoke about that in different ways, right? One was the use cases essentially that need to be established. The second was the changes that needed to be made by the schemes to enable it for the Indian payment ecosystem, right? So I think these are a couple of things. The third being customer education again. So these three seem to be the main reasons, unless I think anyone else wants to add something.
Yeah, no, I would just add the this on credit moving into debit and other card types as well. I think that's important.
Yeah.
And while there are on behalf services available, but like it happened for EMB was also on behalf, then finally it moved to full EMB. Just saying that banks need to be sort of, so if you want volume and scale, I think debit has to come in.
Great. Yeah. Next one being, does the customer have any role or control in the tokenization process? I think Vijay answered that already in terms of if it was implemented in its true sense, there's a lot of visibility that the customer will have and a lot of control that the customer can have in terms of allowing limits, token, the validity, how long they want to make it available on a particular merchant, all of that, right? So that is available. Moving to the next point, what kind of coordination is required between various players in the ecosystem for tokenization to be adopted faster and efficiently? Pramod, do you want to take a stab at that?
Yeah. So there is a certification process as defined by the networks. As Vijay called out, it's an EMB spec, so there are some standards that need to be followed by the ecosystem players. It's available in the public domain. Plus, incrementally, there are some conditions that the regulator is called out. So both of them have to be followed for a successful implementation of tokenization for a rollout in the market.
Yeah. Great. Thanks, Pramod. And the last question is around how are the RBI regulations working towards protecting customer data? What are some of the new security measures implemented for tokenization? I think Pramod touched on it briefly in terms of the changes that they've had to make in terms of the second factor of authentication. Also, the way 2FA will be implemented for tokenization has been had to be implemented. Also, the use cases around scan and pay, in-app, all of that. Pramod, any more details around what are the changes that RBI has expect?
Yeah, so if you see, for example, in the past, and that's what RBI seems to be doing in future also, they've said that the token requesters cannot save the PAN number. So that's something that was explicitly called out in January of 2019 as well. That's very different from how tokenization has been implemented in different parts of the world. So here, the token requesters cannot save the PAN. So the moment the token gets provisioned, every time you want to generate a token out of your PAN, there is a step up that happens. Once the step up happens, the merchant or the token requester in this case has to delete the PAN, and all he's left is with the token. So that's one incremental call out that the RBI did. Other than that, there are some token level controls that RBI asked for implementation. So you see the card controls which are there, and then there are some token level controls which sit on top of card controls, like stating that the consumer can decide if I want to enable scan and pay on this particular token. Can I do in-app on this token requester or not? So there are incremental conditions that sit on top of card controls, which might be very different actually. So your token settings might be very different from your card settings. So these have actually come into play much earlier than what came in for card. So these are some conditions that have to be met before rollout of tokenization for consumer security.
Perfect. Great. I think we are right on time. Thanks, Pramod. So thank you, everyone. I think we had a perfectly engaging discussion and we balanced it well between going to technical versus going to commercial and keeping it very high level. So thanks, everyone. Great insights. I hope everyone else enjoyed.
Thank you.
Thank you. Thanks,
Thanks,
Kritika.
everybody.
Thank you.
Bye.
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 And Lyra and powered by PhonePe. Without any further ado, let's start the panel discussion on payments fraud, the ground reality. Let me introduce our moderator for the session, Mr. Prashant Mara, partner BTG Legal. Now, let me welcome our panelists, Mr. Ketan Doshi, Managing Director and CEO, White, Mr. Rakshit Tandon, Director at Technology, and Mr. Anuj Bansal, Product Management PhonePe. Good to you, Mr. Mara.
Thank you, Shivani, and hello, everybody, and great to be here today to discuss this an important subject. I'm just reading out from recent news reports. Digital transactions are being preferred over cash, obviously because of the coronavirus scare. And in any case, the world was getting more and more digital. Nearly half of the Indian consumers are apparently now concerned about digital payment frauds. And in a survey conducted by a UK-based market research firm and NASDAQ-listed ACI worldwide, nearly 1/3 of the consumers, 31%, have been a recent victim of a card or digital payment fraud or know someone among their immediate family or friends who has. So that's a staggering statistic. So if you know 100 people, then 31 of those will have faced some sort of a payment fraud in the last 1 month or the last 6 months. The disruption that is caused by COVID has just increased the focus on this issue. And we have a stellar panel today to discuss that. As Shivani introduced, my name is Prashant Mara. I lead a firm called BTG Legal that specializes in white-collar crime and technology crimes. We have about 30 lawyers and we practice across Bangalore, Bombay, Delhi, Chennai, and other major courts. And joining me today is a stellar panel. I'll just briefly introduce Anuj, who is a fraud and risk domain specialist. He's currently the director of product management PhonePe with PhonePe and has been covering all aspects of risk from transaction fraud risk, trust and safety, identity risk, compliance, AML risk to application security risk. Great to have you with us, Anuj, and look forward to a good discussion. We have Mr. Rakshit Tandon, who is a cybersecurity evangelist and has experience of more than a decade in the security domain. He is a cybersecurity consultant to the Internet and Mobile Association of India. He is also a faculty for the cybercrime investigations at BPRD, Bureau of Public Research and Development for training of law enforcement officers across the country. He's been awarded numerous awards, and he was also recently, in 2015, awarded the Cyber Guru of the Year award by the government of Maharashtra. Mr. Tandon, we are very pleased to have you with us, and we look forward to an enlightening discussion with you. And finally, we have Mr. Ketan Doshi, who's an entrepreneur backed by 20 plus years of rich experience in business strategy, operations, resource planning, and efficient team building and guiding. He successfully founded ventures in financial services and education industry and is now leading PayPoint India as MD and CEO with a vision of making it a very fast growing consumer service company in India. Ketan, great to have you with us. And without any further ado, maybe we jump into the discussion. Ketan, maybe I'll start with you. And you've had 20 years of experience in business strategy and successfully founding ventures, including your recent one, which is PayPoint India. What has your experience been? What are the top 5 security risks in terms of payment frauds that keep you awake at night and not let you sleep? Over to you, Ketan.
So I'll just give a brief about ourselves.
Sure.
To last mile delivery of financial services. So we have 48,000 stores across the country where a consumer can walk in and access various services. So lately, if you ask me, we are under a fast track digitization mode, and thanks to Corona, thanks to demo, both of us, I mean, both the things have fast track growth on digital side. But if you ask me, the innovation on the fraud side, also, I mean, it is much faster than the growth in the digitization right now, it seems. What keeps us away, if you ask me, fraud sites are the biggest nightmares coming to me at this moment. And I'm sure most of the companies are facing similar kind of issue, where a website which is similar to our website or similar to other brands' website is created. To create a website, it is very fast and very easy to create a website, to host a website. But to pull it down legitimately, it is very difficult. And this is one of the biggest thing where our brand is also suffering. Customers are suffering. Since we are into payment aggregation, most of the aggregation is routed through payment service providers like us, and again that leads to freezing of our accounts, facing the regulators, facing the police. So this is one of the biggest issues right now which we are facing, and it is very difficult in India at this moment to pull down a clone site, and it takes lots of time by the time a new site is created. So this is one of the biggest issue which we are facing apart from the regular phishing mails and all that are still continuing. But this is one piece. Other thing, if you every might have faced this kind of scenario, why I don't know how many few most of the viewers might have sent. You use Quicker or OLX or any site where you sell your old stuffs. Once you load your old stuff, you'll get lots of calls, and most of the issues are hovering around it. That Sab, I want to buy your car instantly at the same price. So that is too much alluring, man, at a price which is not thought of by the seller. And in that pretext, the seller offers his IDs, UPI IDs, or whatever OTPs, etc., is shared with the buyer, and the fraud happens. These are two big frauds happening in the country, and I think as a payment aggregator, it gives me a nightmare.
Thanks, Ketan. Clone sites, phishing, the regular stuff, but also you mentioned consumer awareness or lack of consumer awareness because of alluring business propositions via Quicker or OLX and phone calls pursuant to them. We'll come back to these issues and discuss this in more detail. But I'd like to now turn to Anuj. Anuj, do you want to add anything in a similar vein? What Ketan and his company are facing? Do you see that? Do you see that in your day-to-day work as well? In your company, are there other issues that bother you in the night? What keeps you awake?
A lot of things, to be very honest. Security is always a nightmare, right? It's always about a cat and mouse game where you're just trying to catch these up. The ingenuity of these fraudsters has evolved over a period of time, right? So I can talk back from 2013-14, the days when there were e-commerce frauds, right? They were on the rise where the agent, they would deliver a fake, etc. Still limited to probably even back in 2017-18, where it was a social engineering campaign where you would effectively try to convince a person one-on-one, right? And try to get a fraud. Especially over the last 6 months or last 1 year, what I have seen is the fraudsters have started to collaborate. And what I mean by that is it is fraud as a service. So we have all heard banking as a service, software as a service, platforms as a service. Now it is coming as a fraud as a service, where, as Ketan was pointing out, right, there are these fake websites. While PhonePe itself has just taken in the last 4 months close to 300 websites down. It is right, the spawn rate is close to 1 to 2 websites a day. And you can see over there that the way they have structured it, they can offer anybody for the right price to put in their bank account details. So we've been trying to hack a few of these, and we realize that it is a full-blown industry. The rapid rate at which they are growing is like tremendous. Fraudsters, on the other hand, have also increasingly gotten more sophisticated. They have started using advertising networks. I actually couldn't imagine. I saw this over the past couple of months. Is when you are on a video site, when you are on a social media site, and all of a sudden there's an ad which pops in which says that, hey, you have won something. Moment you click on that, you get redirected, and then you are on your payments app screen. And you're entering a pin, and at the end you have gotten the money away. So that kind of security is just today, I came across a case where I think WhatsApp OTP hack is happening on a major scale in terms of people, again, social engineering compromise. But what this person has done is they have taken over another person's WhatsApp. They have started sending out bulk SMS, bulk WhatsApp messages to everybody in their contact list. They transfer money to this particular VP or this bank account. I am in need and I cannot get in touch with anybody. And even out of, let's say, any normal person has close to a 600, 700 people contact book. Even if 100 people fall for it, by the time you realize it, right, money is already gone. So just the nexus of these things, right? The use of technology, both for the fraud as well as the digital enablement, that has gone to a next new high level.
That's very interesting, Anuj. From what I can pick up from what you're saying, I think technically as well as from a modus operandi perspective, I think you're saying fraudsters have become very, very sophisticated. And everywhere they see an opportunity, they try to exploit that opportunity, be it via WhatsApp, be it via websites, cloning sites, or even using the advertising network, for example. Mr. Tandon, maybe turning to you. You obviously have very deep experience on the law enforcement side as well as on the technical side to track such fraudsters. What are the top 4 or 5 issues that you have seen in the last 12 months, 24 months?
Thank you, Prashant. And as Anuj and Ketan both mentioned, they're getting organized, no doubt about this. But with my experience, previously also and current also, whenever we catch hold of these people and fraudsters from remote areas of the country, they don't seem to be highly educated or qualified. So that is one thing which we all should also learn from. But yes, they are at a winning edge just because they are exploiting the loopholes. And if you, as rightly mentioned, they are targeting advertising now. They are targeting social media, WhatsApps and Facebook by hacking them. But they're also targeting the digital identity of users, and which is getting, because see, in current payment scenario, all the payment frameworks, my SIM card is my digital identity. Initially, when they started the SIM swapping crime, the government of India came out with a regulation that even if you as a user go and get your SIM reissued, your SMS will not start working for at least minimum 24 hours. But now they have attacked on the eSIM thing, the embedded SIM, where the latest handsets like Apple's and Samsung's, they come with this eSIM module. So they are now, with the help of data breaches, which keep on happening, they get so much of data on the dark web or on different platforms. They call the user claiming themselves to be from the mobile company, and they immediately switch over the SIM. And now once the SIM card is gone from the customer, all his digital identity is compromised, right from debit card, credit card, UPI, because everything requires a SIM authentication. So that is one which is really worrying and increasing. And second, they have poisoned the Google network, the Google search engine, with a lot of fake customer care numbers. And people, as mentioned by Ketan initially, that it is very difficult, it takes some time to pull down a duplicate or a cloned site. So these fraudsters, they have used the keyword customer care and consumer service, and they have poisoned the whole network. So suppose I am a PhonePe user and I have some trouble using PhonePe. So my first reflex is to go to Google and search for a PhonePe customer care. And if I'm doing it on a mobile handset, it takes me to some Google Map links where there is a customer care number given. And when I call this gentleman, he asks me very politely that I will immediately get your refund done. But because of social distancing and corona, you need to install a quick support application. So they are asking the consumer to install some remote support applications. And in recent cases where I have got a lot of complaints, where they are also asking you to install an auto SMS forwarder. These applications are also easily available on Play Store. So this is another a very, very common trend which we are seeing. First, compromising your digital identity. Once it is done, so they can get into FDs, loans, whatever they can do. So I think this is two areas. And third is the QR code scanning thing, where people till date don't understand that when I'm scanning a QR code, the money is going out or coming in. So the debit credit concept is still not clear in the consumer's mind. So it is very easy to go to a store and scan the QR code of PhonePe and pay the money. But now this fraudster, he sends you a QR code claiming that first he will send you some 5-10 rupees so that he convinces you. And this is happening on all these common consumer platforms like OLX or Quicker or wherever I'm selling some stuff. And then they send me a reverse QR code. And when I scan that code, instead of money coming in, goes out in seconds. So these are the top lot of complaints, and I would say which is really scary, where they try to compromise your SIM cards, digital identities, social media handles, because in this Corona times everything is being digital, and we all trust this. That day also I got a one complaint where somebody has posted a fake advertisement on Facebook, and he duplicated the restaurant page, and he was offering one thali for one thali free, and it was taking the consumer to a Google form, and in that Google form it was very well decorated with the logo of Paytm, UPI, NCPI, everything was there, and they were asking all the details. So I think yes, consumer level awareness is very, very important, but the numbers is tremendous. So I've been working with so many state police and cyber cells, and I've been, even in this lockdown, I have done a lot of training with the LEAs, and you go to the remotest village in the country, and there you will find such cases happening, because mobile is in everybody's hands today.
Absolutely. Absolutely. Thank you, gentlemen. I think, we kind of set the ground reality, and the ground reality seems to be pretty scary for a netizen today, because everyone, all of us live our lives, almost a parallel life on the internet. And if that is rife with potentially, fraudulent transactions or fraudsters, then, it's a pretty scary place to be in. Now, Mr. Tandon, maybe starting from your side, I'd like to focus on three aspects as potential way forward or solutions here. One is trust. How to build a trusted network or a trusted product or a solution. Are there any, and this is open for all the panelists. We'll go with each of the panelists and ask the same question. How to build a trusted network or a community which for sure is not a fraudulent operation, for example. Are there technical watermarks, for example? Are there technical security measures that a consumer can easily verify before proceeding to scan that QR code, for example? Is there something that you have seen like this, either in India or abroad? One is that question. The second question is, combined with that trust aspect, which the industry has to provide, can the consumer awareness be created in such a way that the consumer is on the other side of the coin, also realizes that it's his or her money, and therefore they have to probably, get away from easy transactions. The life has become all about ease of transaction today. Even though there is a, two-factor authentication and other similar steps, consumers don't like it very often. There's always a backlash against some of these things. Is there any consumer protection or consumer awareness idea that one should discuss? Lastly, I think, which is a ground level reality, the true ground level reality, is enforcement. How is enforcement done? So maybe we start with Mr. Tandon on trust. What's your view on the ability or the capability of for all of us as an industry to build a trusted network or solution?
Prashant, I think there is a lot happening, and we all have seen in the last 10 years, we have evolved with the kind of complaints have come and the kind of products have been built across it. So cyber awareness is no doubt the key, but with the development of technology like AI and artificial intelligence and IDS, we as an organization and as a product also need to bring that trust in our product. We should learn from our mistakes. Like a simple example I would like to quote, not naming any product here, that when I traveled from my country to another country and I just switched on to their network, on my Google account and on my free social media account, I was supposed to verify myself because suddenly my IP address changed. In 3 hours of flight, I from India, I got connected to an Emirates and I was in Saudi. So they asked me to verify. And at the same end, when I was using a payment gateway, a transaction for my country, India, there was no second level authentication. They trusted me as Rakshit Tandon just because it was the same device or something. So I think with that example, I want to say here is that we should learn now. Like, for example, we have all heard of these QR code scams going on where people are just cheated because they scan the code thinking the money is coming in. So just a simple language second level alert should generate on the screen that, hey, this is amount is going. Because see, you'll talk to many of the students also, they don't understand the difference between debit and credit. So in a simple language, agar hamare or Hindustan, and when we are talking of my country, we have to go to the general grounds also. I can today in the morning I was buying vegetables from a vendor on a thela, and I could scan the code and pay him. So, and I don't know how much of security framework does he understand. So that trust is very important from the product side, which could be learned. Awareness, a lot of programs are being done, and already government agencies, NGOs, with Internet and Mobile Association of India, since 2008, we have been doing these awareness program extensively with schools, students, parents, communities, and even as advisor to Cyber Peace Foundation, we have been doing this with law enforcement agencies. So the law enforcement agencies now have come up. Like currently, our campaign is running in Punjab Police. We call it Cyber Suraksha. We just finished a campaign in Telangana Police, in Assam Police. In every state is trying to do such activities. I think that is another way to take forward to build consumer awareness. But also, not only two-factor authentication is helping here, but putting up some controls in the product will also help. Like, for example, today I can control my cards from my mobile applications. When I'm not using them, I can simply turn it off. There's an on and off button. And even if my card is being stolen or some data has been breached, the hacker is not able to do any transaction because I am controlling my card, my limits. And similarly, like a double authentication on checking. Suppose I am in India, I am in Delhi right now, and I do a normal pattern. AI can study my pattern of transaction. And suddenly I have done a transaction at 12 o'clock, and 12:05, there's a transaction happening from Jharkhand, Guwahati, Mewat. So at least that much of AI or intrusion detection system should be there in the products now, which should be built in by the organization on studying the pattern of the user. That, okay, this user always uses an Airtel connection. He's always in the vicinity of NCR region. In 24 hours, he travels to Delhi, Gurgaon, Noida. And now, if he is done, then a second authentication should come in. The transaction should stop. So these protections can be built in. And yes, there is a lot which can be done by the product itself. Like as I mentioned, this Google poisoning of black hat SEO, where their customers. So why not, if I search PhonePe customer care, then the first link which should appear on the screen in bold letters should be the PhonePe actual number. So the redressal should be made simple. And talking from the government side, cybercrime.gov.in is a big step. And you can see on the site, we are building up a financial risk module, especially, and we are testing it in Delhi. We are trying to link all the police station online. So as soon as the user reports it online on cybercrime.gov.in, it automatically connects to the nodal and the cyber cell officer. And they start doing, at least in so many cases, we have been able to stop the fraudulent payment. But then it requires a good redressal from the products also. So whether it is Paytm or PhonePe or the payment aggregator in between, so that their legal or risk system should only not be dependent on कि वो पुलिस की mail आएगी, then they will act on it. क्योंकि आपको पता है, this money speed has become very, मतलब it is too high today in terms. In the time of NEFT, RTGS, there was still some cushion to stop the payment and revert. But today, when I scan a code, it gives me a tink that gone, the money is gone.
Absolutely.
So there, I think this is what I think can be done to develop the trust and to spread awareness.
So I think I'll come to Anuj and Ketan shortly on the trusted product and trusted solution question. From a law enforcement perspective, I completely agree with you, Mr. Tandon, that like a network for the product itself, I think we ought to build a network for enforcement, effective enforcement, which at least matches the speed of the fraud. Or tries to match the speed of the fraud. Today, CRPC, Indian Evidence Act, these rely on archaic sections that talk about notices, that talk about magistrates' orders, etc., which don't really keep up with the speed of a fraud committed online today, anywhere in the world. Therefore, I think just like the companies should be talking, I think it is a huge requirement that judiciary, for example, the legal departments of the companies, banks, as well as law enforcement agencies and the victim or alleged victim should also communicate in a fashion that they are connected to each other, and speed becomes almost second nature in the communication and action. So going on to Anuj, are we heading towards then a more? I know that a lot of the products today in the payment space pride themselves on ease of transactions, for example. That's the key, right? I mean, accessibility, scale, ease. But are we heading towards more regulated, more multi-faceted, multi-step approach to security built within to the product? For all the reasons that we discussed. Your views, please.
Sure. So yes, definitely we are moving to a MFA or a multi-factor authentication. It's not just about OTP, right? While RBI has been proactive, we have had 2FA since the very start. Even then, the fraud rate in India is quite high, and a lot of people do lose money. Right? Even today, right? We do practice inherent risk engines. So we end up blocking close to 1 million to 2 million transactions every month, just based on the risk profiles, right, that flow through our systems, right? The problem is not that we check for location wherever possible. We check for device. We check for the entity behavior. So if Anuj has never transacted for more than 10,000 and all of a sudden there is a 1 lakh transaction which is going to come in, those do have red flags and we do block certain transactions. See, the problem is a little bit multifold post that. The first problem, building trust, is around awareness. I think enough has been talked about on the same topic, and we are working as an industry towards that. The second, of course, what Rakshit sir was also mentioning is around the intervention. So that is towards the product strategy, right? How do you intervene? So even today, right, what we had seen, so one of the use cases I'll tell you, we saw people on social engineering who would say, transfer to my number or just enter my number and then click on the pay button. That is how you will receive. So the moment you now enter the number, and if that is something which is an unknown contact for you, we throw up a warning. Hey, this is not somebody who you trust. Do you really want to transfer funds to this person? Unfortunately, that has also become a muscle memory, and people are just clicking through and going on. The other steps, right? One is towards the law enforcement agency. Now, this might be a slightly controversial. I do believe that cybercrime should be centralized in India. Primary reason for that is a bank account holder. Let's say I have a Rajasthan bank account sitting in Bangalore. The fraud happened by a caller based out of Mumbai, and the money went to a region in West Jamtara, and the money withdrew in West Bengal. Right now, you're talking about 6 LAs actually trying to coordinate for a 20,000 rupees fraud. That is not going to happen. I think we need to have, while every state has had its own cybercrime police station, a lot of this, right, to break the backbone of this industry, the fraudsters, right, today they need to be held accountable, right? They need to get punished. So that is something which is definitely needs to come up. The other points are around on the data sharing, right? So as Ketan is there, as I'm there, right? As the entire industry, we are working in isolation while these fraudsters are collaborating much better than us. We as an industry need to come together to make sure that a same fraudster cannot fraud on multiple platforms. There have been some steps with RBI, with a couple of other folks as well. So those entities itself need to get blocked, because why are we allowing somebody to use the same phone number to fraud on 10 different platforms, right? The last or the second last piece I have is towards the enforcement, which is basically as an industry. Let's say if today I get to know that one of my customers or my users has been defrauded, unfortunately, since the money moves through a very complex intermediary stage, we are unable to block it. That is where we need to figure out how do we work together as an industry, because we need to block that amount from going out. The moment it goes out of an ATM, it becomes cash, it is untraceable. So therefore, till the time it is in the digital ecosystem, we need a way to capture that out. Last one definitely is around the legal. I think you are more qualified around on that. But yes, some of the laws, a lot of the acts that are being applied, they either give an absolute power in terms of freezing a bank account completely, or basically they don't do anything, right? At the end of the day, it just becomes a case file and we get it to close it. So therefore, I think those are like the different actions that we need to have the people to trust, because at the end, if a common man loses money, right, he doesn't care about anything else, how big a company is, how good the fraud systems are, how good is the legal system. At the end, if he gets back his money, I think that is the value add that we have to do as a industry and as risk professionals to the customer.
Thanks, Anuj. Sorry, I think I was on mute. I think those were all extremely valid points. I'd just like to react to 2 points. One is, I think centralization of cybercrime enforcement is absolute. I fully agree with you. I even go to the extent of saying not only the cybercrime police should be centralized, but cybercrime judicial, courts should also be specialized and centralized, because, like you say, not only jurisdiction of where to file the FIR, but when you in the use case that you described with 6 jurisdictions, which magistrates court will get jurisdiction to try? That's the second big question that comes up. So I think a very, very fresh thinking is required in terms of enforcement, law enforcement, as well as judicial intervention in the aspects that you mentioned. And Ketan, turning to you, what are your reactions? Do you share, what Anuj just said in terms of not only product trust building within the product, but also strengthening sharing of information and legal and judicial intervention?
So of course, I mean, both Mr. Tandon and Mr. Anuj, what they are referring is the real issue at this moment. There's no close coordination between the agencies. There are cyber cells across the country. Cyber officers are not really equipped to deal with this situation. So if a cyber cell wing in a small village or small district will be operating in a different manner vis-a-vis a cyber cell operating from Mumbai or Delhi. So the way they act to a situation is very different. Mostly, the quickest thing can be we'll get a mail from the cyber cell to freeze an account. Now, freezing an account is a very fast action which can be expected from them. But why it was freezed, whether it should be freezed, under what section it has been freezed, whether the money trail is actually lying with them or it is gone ahead. I'm telling you, we have dealt with the situation. It only takes half an hour for any criminal to actually withdraw the money from an ATM. It is half an hour is also, I'm sure Anuj and Kandanji might have seen it across. So maximum half an hour is the TAT for a criminal to actually move out money out of the system. So within this time, I find it difficult for our system, the current system, to really get the criminal get the money getting locked into that would be very difficult. So for us at this moment, I would recommend is we need to have down we have all the guidelines in place, but there are no laws which stops an advertiser to do a qualified advertisement for a site registration, whether we are following the right KYCs to register a site online, whether we have an SMS guy allowing SMS to a right person. So this needs to be filtered now. The ecosystem around the payments should be strengthened in order to get this thing in place.
Ketan, I think that's a really, really good point. I think the ecosystem around the payments network needs to be strengthened. And I think that kind of summarizes all the discussions we've been having over the last 45 minutes. I think from a enforcement perspective and from in the courts, we as lawyers work with 2 cardinal principles. You either follow the money or you follow the person. And unfortunately, you're right. That police are still used to following the money, and therefore the immediate quick thing that they can do is to freeze the account, to show that action has been done. And frankly speaking, the laws don't give them any further quick reaction remedies at the moment either. Now, one last question to Mr. Tandon, and then perhaps we can look at some questions. There are quite a few that have come up on the board. Mr. Tandon, from the discussions we have been having over the last 45 minutes, it looks like these are well-planned operations. It looks like there are certain individuals or groups that are planning and executing these frauds on a regular basis. it still surprises me that we have not been able to make some examples out of some of these major groups, for examples, fraudsters or criminal organizations. I agree that quick reaction may not be possible given the current legal system and given the enforcement capability at this stage. But I'm assuming that digital footprints will be there, or fingerprints will be there, leading to 1, 2, 3, 10, 100 people successively on a very regular basis over the last 12 months, 24 months, 36 months. Why can't law enforcement target some of these individuals just to make an example and to use it as a test case to see how can things work? Or are they doing it and we are not aware of it, is the other way to put this question. Mr. Tandon, you're on mute.
Sorry. No, Prashant, they've been successful. We have busted so many rackets, even in, if I mention Uttar Pradesh, Haryana, Madhya Pradesh has done, Mumbai itself, Bangalore, Kolkata cyber cell, and the same organized rackets have been busted. They've been picked up in like numbers. Recently, there was a big fraud of about 63 to 64 lakhs by a SIM swapping case from Jamtara, and our Lucknow cyber cell, they got hold of around 4 people from that place, and they were arrested and they were brought to Lucknow. Yes, as Anuj rightly mentioned, that jurisdiction is the biggest issue. They become organized because initially there was no deterrent. And even if we look at the IT Act, where actually these cybercrime cases are referred to, IPC plus IT Act, then even in IT Act, the maximum punishment they go through is 3 years.
3 years.
And with a 1 lakh rupee fine. And the time taken to prove the digital evidence again is a big, you can say, a challenge. Because finally we have got, 8 certified labs as of now in the whole country, and that too happened in 2018. So that is another challenge for the LEA. So LEA does the job, they arrest the people, they send the devices and all for fingerprinting and forensics. But then the court process starts. So if you look at the figures in NCRB also, the National Crime Record Bureau, the acquitting is very less. So the fear is not there. So even if the hacker, he says that I am earning 10 lakh rupees per month as an organized criminal, 10 lakh per day as an organized criminal, and you are arresting me for a fine of 1 lakh rupee and 3 years of jail, I'm okay. After 3 years, I will continue. But first you give me a full punishment. So I think there is from the law enforcement and the government side, I think we should have a strict amendment in the laws looking at the rise in cyber crimes and the numbers. Then rightly mentioned, until unless we don't have a central system, we will not wait for a central police like CBI to form. I don't know what time it will take. But the initiative I4C has taken, we should work with that initiative, the Indian Cybercrime Coordination Center, of at least bridging them together. And if all these cybercrimes cells get connected, I think there will, we can see good results coming in. Arresting has been there. I can give you hundreds of cases in the last, I'm talking to you, and the Punjab Police Cyber Intelligence has busted a wonderful racket of these fraudsters. And it was a very good case study for all of us to understand the different modus operandi they were using. The Ludhiana Police Cyber Unit has just busted, and they have arrested, I think, around tune of 15 to 20 people, and a big gang has been busted. So, but yes, the challenge is that the knowledge sharing is not there. And secondly, we need strict changes in the laws now, not only in the fraud domain, but also in the space of obscenity and child pornography and stuff, which is also increasing in parallel. And it's been 2008. The IT Act was made in 2000, amended in 2008, and we are sitting in 2020 with the digital economy. So 126 crore people are having Aadhaar card and 100 crore are on mobiles. So I think, yes, it is high time we bring strong changes in the laws, and that will create the deterrent in these rackets. And finally, when they are busted, so they will also get fearful.
Great. No, thank you, Mr. Tandon. I think if I were to summarize, we are looking at, again, the 3 pillars, which is enforcement, strengthening the judiciary, strengthening our laws in order to kind of quicken the process. building trusted network solutions, and then awareness. Thank you, gentlemen. I think that kind of summarizes our discussion very well. I think we've run out of time, but I'll do a very quick rapid fire round of questions. I request all of you to keep it short, maybe 20-30 seconds for each question. A lot of these questions we've already answered, so I won't ask again all of the questions. One question for Mr. Tandon. Who is liable in the case of fraud, bank or PSP? Mr. Tandon, I think you're on mute.
We have very clear guidelines from RBI, and we have to follow those guidelines. If the user is at fault, and then the user has to bear the money. But like cases of cloning and cases of money being transacted abroad, where you find, or there is a case of identity theft at the service provider level. So in that cases, there can be liability on the second person. But and then also RBI has clearly mentioned that the complaint should be filed within 3 days of the crime and the incidents, and it has to be reported to both. And once it has been reported to both, after that, if there is further drain of money, then again the bank will be liable, or the money holding company will be liable. So that is what the RBI latest guideline says, and we have to follow that.
Absolutely. One for Anuj: how to streamline and simplify the reporting and resolution process for end customers.
So we are working on some of this. One is basically we, at least on our website, our app, we have made the option to report a fraud very easy, right? You can just click on a transaction and report it out. The moment you do that, as next step, what we are doing, also starting to do is inform your beneficiary bank and the remitter bank. This in turn should help us in bringing the overall money movement down, at least from the next level out. But from a customer viewpoint, again, it depends. If it is, let's say, a wallet or a merchant payment, a clear visibility into, we track it and close it out with the customer. If it is a peer-to-peer or an external UPI transaction, and at best we can inform in terms of where that money has gone to.
Okay, great. Thanks, Anuj, for that succinct summary. And the last one for Ketan, something that you have already touched upon, Ketan, in your discussion, but maybe you can elaborate. How can fintechs, banks, and regulators collaborate to effectively reduce the number of frauds and successful resolutions?
So we need to have a centralized agency to coordinate between the entire stakeholders, right from regulators, the local police station, the central police station, the Home Ministry. We need a coordinated effort at all the levels. Then this lacuna can be plugged. And the officers needs to be really a new tech enabled officers heading there.
Thank you, Ketan. I think those are absolutely bang on in terms of relevance. Anuj, Ketan, Mr. Tandon, thank you very much once again for being part of the panel. It was a pleasure to host you all. And back to you, Shivani.
Thank you to all our esteemed panelists for such a wonderful conversation. Thank you to our audience as well. Special thanks to our gold partners, Visa, Freshworks, AWS, and silver partner, Zeta, Paytm, and our knowledge partner, PwC. Thank you, everyone. Please stay tuned. We have a day 2 coming tomorrow for the session. Thank you.
Thank you.